but long term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country, not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
So for many of you, the trade war begins right now. Canada planning a 25% levy against $106 billion of American goods. Mexico preparing a response, and China's Commerce Ministry vowing, quote, corresponding countermeasures. The tariffs set to go into effect in fewer than 24 hours. Your team coverage continues. Joining us now is Bloomberg's Tyler Kendall in Washington, Derek Decloet in Toronto, and Creighton Harrison in Mexico City. Tyler, I want to go straight to you. We talked about the calls that will take place between the U.S. leader and his Mexican and Canadian counterparts. One, we want to understand if there's scope for negotiation here, but also for the companies affected by this, will there be any carve-outs?
Right, John, these are still some of the questions that remain to be seen. We're waiting for what that benchmark of success is that President Trump needs to see when it comes to progress to address immigration over the border, and also fentanyl that is coming in. Now, the White House did circulate to us reporters here a memo touting some of their potential benefits when it comes to tariffs and downplaying inflationary concerns after President Trump suggested that Americans could feel a little bit of pain. Notably, the White House seems to be trying to hone in on this idea that these tariffs will help boost U.S. manufacturing, something that President Trump campaigned heavily on. But not everybody agrees, John. The National Association of Manufacturers, which represents about 14,000 U.S. businesses, in a statement obtained by Bloomberg News, said that this would have, quote, severe ripple effects for its members.
Creighton, when it comes to Mexico, Claudia Sheinbaum's talking about her Plan B. She's telling her economy ministry that she wants to enact the Plan B in terms of retaliation. What does that involve?
Well, I wish I could tell you a straight answer. They've been behind closed doors for most of the weekend. It's a long weekend here in Mexico. Today is a federal holiday. But we know that it's some mix of retaliatory tariffs and what she has referred to as non-tariff actions. We think that that may be sort of gestures toward cooperation on security and closing the border. But we should hear more details in the coming hours as Claudia Sheinbaum rolls out her plan and her finance minister meets with investors.
Meanwhile, Derek, we have seen some response in terms of retaliatory tariffs coming from Canada, in particularly some goods from red-leaning states. What do we know about that, and what potentially could be to follow should the tariffs go into effect and stay there for a while?
Yeah, I mean, there's two phases to the Canadian response. One is on Tuesday, there will be tariffs on about $30 billion worth of goods, a lot of consumer goods, as you say, things from red states, orange juice from Florida, and so on. But then there's a second phase, a much larger phase, that is Canadian $125 billion. That includes the really big ticket items like cars and steel and aluminum. But there's a 3-week process for Canada between now and when those tariffs would come on, and that is both to allow companies some time to adjust, but also perhaps gives time for a bit of an off-ramp if there are to be negotiations. I think in Ottawa, that is very clear what those negotiations, very unclear what those negotiations would look like at this point.
What could Canada offer as a potential off-ramp? Justin Trudeau will get on the phone this morning with President Trump.
It's a good question, and I think you can summarize that Trudeau and his cabinet are somewhat frustrated because the evidence on fentanyl and migration, illegal migration coming from Canada into the U.S. is fairly thin, to be honest. There is some, of course. There's drugs that move both ways across the border. There are guns and so on. It's not that there are no issues at the border, but they are seen as relatively minor, and they have offered a security package, quite a visible security package, to sort of beef up some of the weak spots in the border, particularly around Quebec and New York State. So I think that there's a bit of frustration that they don't know what they can offer at this point.
You can sense that frustration. Derek, appreciate your time alongside Creighton and Tyler there. This note just dropped from Torsten Slock over at Apollo. Goods imports make up 11% of US GDP. 43% of imports come from Canada, Mexico, and China. Torsten goes on to say this means that 5% of US GDP is directly impacted by these higher tariffs. This is meaningful when annual GDP growth is normally around 2%. It could make a big difference.
It could make a big difference. It makes an even bigger difference, though, for Canada and Mexico, where about 80% of their exports they send to the United States. And I keep going back to what George Saravelis of Deutsche Bank wrote, which is for Canada and Mexico, we see this trade shock, if sustained, as being far larger in economic magnitude than that of Brexit on the UK, and would expect both countries to enter a recession in coming weeks.
Hearing the same thing across the board. The likes of Mexico, Canada plunging into recession, and also this from Capital Economics too. The door just slammed shut on a rate cut anytime soon from the Federal Reserve.
You're seeing that priced into short end of the yield curve. What this does long term, no one has a clue, and you could see that from stasis at the long end. That said, there wasn't really pressure for them to cut rates, and Donald Trump doesn't seem to be pressuring this Federal Reserve to cut rates anytime soon, saying they made the right call.
I noticed that yesterday evening. That was probably the most surprising thing we heard from the weekend. The fact that the president thinks the Federal Reserve made the right call last week.
I was shocked, and it shows that he actually cares about inflation, and he wants to tamp down long-term inflationary expectations, make the University of Michigan Sentiment Survey great again.
Yeah, okay. We'll leave that one there. For those of you just tuning in, maybe not familiar with Bramo's sarcasm, very sarcastic. Jay Pawlowski of TPW Advisory joins us now for more. Jay, good morning.
Tough to match that sarcasm,
Hey,
but
good
it's
to see you,
impressive.
sir.
You know, 7 a.m. Impressive.
It's a big change over the weekend. The day after the election, and we caught up with you, we were pricing in a positive growth shock, positive demand shock off all these things we'd see from the incoming administration. Are we now pricing in a negative supply shock? And how different is that?
Well, you know, John, I think, first of all, there's no surprise here, right? Everyone knows that President Trump is going to put tariffs on. So we are adopting at TPW Advisory what we call the Stoic strategy, right? Back to the ancient Greeks, imagine all scenarios, be surprised by none. And so we do not pay attention to what President Trump says. He says anything at any time. We want to pay attention to how he acts. What are the actions? And so, you know, we don't often find ourselves in agreement with the Wall Street Journal op-ed page, but their title, The Dumbest Trade War in History, I think really applies here. But there are three keys as we see it. First, we think these tariffs are going to stick, okay? Trump needs money. This is a money grab, period, to fund the tax cuts. These are going to stick, but there's going to be a furor around them, right, as you just pointed out. Growth down, inflation up. So this is probably it for tariffs. Not going to have any more bigger ones, additional ones, in my view. And secondly, China now knows what's going to happen, so it can act, right? We're focused very much on a global growth long cycle where stimulus from Europe and Asia extends and broadens out the global growth cycle, which supports global equities. And so we want to pay attention not to the news, but to the reaction to the news. And this reaction is muted. And there's a reason for that, because it's not a surprise. And therefore, what we care about are earnings. And what I think this does is this does reduce the growth shock, the upside to earnings. We have no room for multiple expansion. The U.S. is priced for exceptionalism, needs to have earnings growth. So we have been of the view single-digit S&P returns this year, double-digit non-U.S. returns. And I would just say that year-to-date through January, non-U.S. is outperforming the U.S., led by Europe and China.
So this is the key point. How does that continue if right now the rest of the world is treating, and investors are treating, tariffs put on by the United States as a much bigger growth shock for the rest of the world than the United States?
Because I think that's wrong. That's just going to be wrong. And the reason, again, is simple. Because the rest of the world has the ability to act. Who has fiscal space in the global economy, right? Germany's debt to GDP, 63%. China's debt to GDP, 65%. U.S. debt to GDP, 120%. We have no room. And the other thing where we disagree strongly with the consensus is the view that this is dollar positive. We think this is setting up for potentially the big fear that we have is a crack in the dollar, right? The U.S. is putting gates up and barriers up and breaking deals with the rest of the world at a time when there is no country more exposed to international capital flows reversing themselves than the U.S. The U.S. has never had more foreign money invested in treasuries, corporate credit, U.S. equities. If that money starts to go elsewhere, so we think capital repatriation is going to be a big term over the course of this year. Money is going to go back to fund Japan's stimulus, go back to fund China's stimulus, go back to fund Europe's growth. And that means dollar down. And that means if it starts to get going, that's big action.
If dollar's down, then what wins? Gold?
What wins? Commodities, right? And so what just broke out over the last month? Commodities. Commodities are the best performing asset class year to date, outperforming equities, outperforming bonds. Emerging markets, China. Okay, for all the negativity on China, and we've talked about this for over a year or more, and we've been constructive, bullish, and exposed, and China is outperforming the U.S. in equities. For all the negativity, and look, DeepSeek was a week ago, right? I mean, stuff comes fast. It was a week ago, DeepSeek. China tech is completely underowned. There is a massive rotation trade out of U.S. tech into China tech. China tech is world-class, yet sells at a 50 to 75% discount to the U.S.
Because the state might take it over at any minute.
Well, what might happen here?
And more export controls might come down on China.
What happened to GM today? What did the state just do to GM, right? Just knock the heck out of it. I mean, it's not really any different, in my view.
You think these tariffs hold?
I'm sorry?
You think these tariffs hold? You think these tariffs hold? They stick?
Yes, yeah. I mean, it's a money grab. Trump needs money for tax cuts. It's that simple.
You don't think
that's why it's coming now?
They can't negotiate it on a call a little bit later this morning.
Well, you know, if they do, you know, big deal. Then that means that the tax cuts don't happen, and that's probably not all that negative, right? Because that means that inflation and rates probably are not that bad, and therefore the economy is okay, and earnings are okay. What Trump's trying to do is thread a needle, right?
Jay, you said that you look at what Trump does, not what he says.
Yes.
What he did, at least what we've seen in this iteration of his administration, is he threatened tariffs when it came to Colombia, but then he didn't use them because Colombia ended up taking the deportation flights out of the United States. Isn't there a chance for an 11th hour deal here?
Oh, yeah, sure. But in which case, you know, status quo ante. You know, big deal. Our view is we want to be in the non-U.S. equity markets. We think we're at the beginning of a multi-year move out of the U.S. into non-U.S. Commodities breaking out supports the idea of global growth upcycle, and expanding. And what we want to see now is non-U.S. equity breaking out to support the idea that that's where the action is going to be. And they're all right there. Yep. They're all right there. All, you know, Europe, China, emerging markets, all at important technical levels. If they break up, and probably not today, given the action, but you know, going forward, they break up and out, then the money that's going to follow that is going to be tremendous because nobody, absolutely nobody, is invested.
Jay, you're going to stick with us. I'm pleased to say Jay Pawlowski there of TPW. Equity futures down by 1.6% with an update on stories elsewhere. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. President Donald Trump says he will have separate calls regarding tariffs today with Canadian Prime Minister Justin Trudeau as well as Mexican President Claudia Sheinbaum. Trudeau has already pledged 25% retaliatory tariffs on more than $100 billion worth of U.S. goods. He says Trump's actions risks job losses and higher prices for Americans. A U.S. citizen was one of the 3 hostages released by Hamas over the weekend. The release was part of a 4th hostage prisoner swap, with Israel releasing 183 Palestinian prisoners in exchange. Israeli Prime Minister Benjamin Netanyahu is meeting with President Trump tomorrow at the White House. And DeepSeek, which you just were talking about, is the most downloaded mobile app globally, with India accounting for the biggest percentage of new users. That's according to app figures. Still, its total users pale in comparison to ChatGPT, and there may be more hurdles for growth as companies and governments weigh risks associated with the Chinese AI app. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, the risks of Trump's tariffs.
If over the next year we keep these tariffs on, escalate them in response to their responses, add tariffs to the European Union, add a universal tariff, all of that, I have no doubt would be quite a big hit to growth.
That's the debate so far this morning. Equity futures negative across the board. From New York City, you're watching Bloomberg TV.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equities are down across the board here. We're negative 1.6% on the S&P. On the Nasdaq, we're down by 1.8 on the Russell. We're down by 2 percentage points. Europe, of course, not spared. The Euro Stoxx 50 so far in the session is down about 1.7%. Under surveillance this morning, the risk of Trump's tariffs.
Doesn't look to me like Wall Street has priced in these tariffs going into effect on a sustained basis. And by the way, I hope Wall Street's right about that. So you can't look at the market right now to infer what would happen if over the next year we keep these tariffs on, escalate them in response to their responses, add tariffs to the European Union, add a universal tariff. All of that, I have no doubt, would be quite a big hit to growth. This is basically 2 weeks in to the administration, and he's promised us he's just getting started.
Will it stick? Is there scope to negotiate the tariffs going into effect in fewer than 24 hours? Back with us is Jay Pawlowski of TPW Advisory. Jay, I want to go straight to a core call for you, and it's foreign exchange. Let's bring up the foreign exchange mood board this morning, if we can call it that. It's a bad mood. If you look across the board, it's dollar strength against the Canadian loonie, against the Mexican peso, and against the euro. Euro dollar down to 102.60. I just want you to briefly explain why you believe this might be this morning's move, but over the short to medium term, you're going to see a change potentially develop, Jay. Where does that change come from?
Well, I think, first of all, John, the U.S. is priced for exceptionalism, right? Everyone is here. The U.S. has outperformed the rest of the world for 15 years. That has brought in all the money, right? And what has made the U.S. exceptional is tech. And what just happened last week? U.S. tech was exposed by China as being not that exceptional. And that's just an inkling of what we think will happen policy-wise as we go forward. Here in the U.S., what do we have? We have policy chaos. I mean, as we were talking about this morning, Trump is trying to thread the needle between raising tariffs without raising inflation, lowering growth, or affecting the stock market. Not sure he's going to be successful. Outside the U.S., as we touched on earlier, who has the fiscal space to stimulate, to grow their economies? Germany and China. We expect both to stimulate. Germany after the elections, they'll ease the debt brake. China with its NPC meeting in the spring. Now they know what Trump is going to do. That's the advantage here. Trump has moved because he has to get going on the tax bill, because he has to extend the tax cuts by the end of the year. Now China can act knowing what the president is going to do. And sorry, just to finish, and then money follows that action. Sorry, you know I love that.
No, I love it, Jay. Never
done that
It's the last slide
exactly.
of the
I know. All right, come on, discuss the slide.
Conclude.
You done? You good?
Yes, I'm good.
All right, so here's my question. Ultimately, if you end up with this type of scenario, how much conviction do you have to have very little to no exposure with U.S. dollar assets, U.S. government bonds, U.S. equities, and just go into Germany and China right now?
Sure. Well, let's be straightforward, right? We run a global multi-asset model. We're 50% ACWI, 40% Barclays Ag, 10% Goldman Sachs Commodities. We are overweight. We're 70% equities, 10% fixed income. We have had zero treasury exposure for over 2 years, and we are double weighted in commodities. What's outperforming year to date? What's leading? Commodities. They are breaking out. We think we're at the beginning of that. Just look at what Trump's tariffs are doing to oil. We are triple, quadruple weighted emerging markets with a double to triple weight in China. We think EM is going to lead non-U.S. because a weak dollar supports emerging markets, a weak dollar supports commodities, and we are expecting money to follow the action. And where's the action? The best performing markets year to date are Europe and China. I mean, as much as people want to say China's horrible and Europe can't do anything, the market is telling us different, and we want to pay attention to the market. We believe the market is smarter than me, than us, than everybody. And so when we look at that, we see markets breaking out. We want to follow that action, and the fact that no one is invested in these spaces, China is uninvestable, is the opportunity. And as that money repatriates, capital repatriation, John, we're reshoring jobs. We're reshoring production. Why should we not reshore capital? And right now, the U.S. is telling everybody, you know, we don't really care about your capital. Basically, they're saying we don't really care. We're just doing what we need to do for ourselves. That is the message. And if the world's capital decides, well, then, hey, we got to do what's best for us. And what's best for us is going back home because we're finally getting our act together. Boom, the dollar starts to roll over, and there is a lot of room for the dollar to fall because it is massively over-owned.
This is a contrarian call. You'll be back in a month, and we'll check the scores.
Excellent.
All right?
Happy to be
Pawlowski of TPW Advisory with a very different view on financial markets.
Yeah, Germany and Europe has a lot of investment to do. I was in Austria. They ran out of a train. I had to take a bus.
This feels personal.
It's true.
Are you really going after infrastructure?
No. Okay, all right, but the train system of Germany and Austria.
Ramo's train's delayed. Stay the Eurosox 50. Is that how this works? That's not trading advice, okay? From New York, this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
So two views. Here's the less constructive view. Neil Dutta, Renmac. The strike price on the fabled Trump put might be much lower than investors appreciate. Here's the more constructive view. Peter Cheer, Academy. Stopping the flow of fentanyl. This rationale for imposing tariffs may be the reason why these tariffs are short-lived and have minimal impact. Which one you choose is the judgment call this morning. How long this lasts? That's the key question. Equity futures down across the board. On the S&P 500, we're negative by 1.6%. The underperformance from the small caps, the Russell, down by more than 2 percentage points. With your movers this morning, it's Manus Cranny. Morning, Manus.
Jonathan, good morning. And it is all about relativity. For GM, 63% of their cars are assembled here. Their cars and their flatbeds are assembled here in the United States of America. Ford is 83%. So it's about the relative exposure to these tariffs. A $25,000 truck by Chevrolet is not going to cost $6,350 more, $250 more than it did at the close of business tonight. This is about the scale of import. The U.S. imports 3.6 million autos from Canada and Mexico. 22% of the total amount sold here in the United States last year. Worst case scenario, RBC, Tom Narayan has done the numbers. You could have a double-digit hit on earnings, down 21% for GM. The biggest bruiser of them all is actually a European company. It is Volkswagen. They export 500,000 autos from Mexico into the United States of America. German auto suppliers operate 330 sites in Mexico. This is about a deficit which is vicariously transferred from Europe into Mexico to the United States of America. It's about triangulation. Constellation brands, Modelo, Corona. You fancy a beer? It's possibly going to get a little bit more expensive. Constellation brands, of course, imports these Mexican beers into the United States of America. What's the margin hit? Piper Sandler downgraded the stock to neutral from overweight and a PT drop to $200. Again, we're still a little bit away from that, from $245. As you said, Jonathan, it's about whether you take the bid of the offer, short-term margin, or is it something much longer term with a harder to define off-ramp?
Manus, thank you, sir. Constellation brands down by close to 7% in a pre-market. Under surveillance this morning, our top story. President Donald Trump saying he will speak with the Canadian Prime Minister Justin Trudeau and the Mexican President Claudia Sheinbaum later on today. Sheinbaum is expected to deliver new measures against Trump's tariffs at 8:30 Eastern Time. This is what we all want to know. What can they do in the next 24 hours to stop this from happening?
Well, we don't know yet because Trump talking about it has not really given an off-ramp. We don't know what would constitute a success from either Canada or Mexico for him to pull back these tariffs that will take place after midnight in less than 24 hours. What's interesting is the timing of this. She's set to speak at 8:30. Does the phone call between Sheinbaum and Trump happen before or after that? She talked about this Plan B, but we don't know yet what the Plan B entails. If you look back what happened Trump 1.0, when it came to aluminum coming in from the United States, coming to the United States from Mexico, they went after things like pork and other measures from red states, as Lisa's been talking about that Canada is doing as well.
You mentioned the timing. It's a few days before the Super Bowl.
So avocados,
people are calling this the Super Bowl tax because you have your cerveza and you have your guacamole, and guess what? It's going to be a couple bucks more, and that's basically on the talk shows what all of the Democrats are saying. Again, let's see if it goes into effect. People had said he wouldn't do this right before the Super Bowl. Guess what? Here we are.
About half of vegetables and 40% of fruit imports come from Mexico. Numbers are pretty staggering.
Cherry tomatoes, that's going to be hit hard. Avocados, that's going to be hit hard. Toy trucks, you might want to load up on toy trucks if you want to get ahead of some of these tariffs. PSA this morning.
Thank you. Who's that for? The children that might be watching?
Correct.
Okay.
Joey?
The 5-year-olds out there that are very, very angry about their toy trucks.
Get your Tonka now.
I hear you. Equities right, down by 1.6% on the S&P. I've mentioned some movers, the automakers, the ones to watch. Sliding this morning ahead of Trump's tariffs, Volkswagen and Stellantis leading declines in Europe, with exports from Mexico under threat. Stateside, shares of Ford and GM under pressure. Wolf Research expecting tariffs could add $3,000 to the price of a new car. Here's another stat for you. Airbags and seatbelts, nearly 80% of imports come from our neighbors.
This just shows why General Motors in particular is in such a precarious situation. And GM shares already are down 7% so far this year without this pre-market move that we're seeing today. I just wonder from a political standpoint, do you really want to do this to Detroit? And that is where some people are questioning the popularity of some of these moves. And what happens if you have some of the epicenter of swing states that went for Trump seeing their businesses really hammered? I just think about that in particular with these companies that are getting hit some of the hardest.
It's a very integrated supply chain when it comes to the automakers between Canada, the United States, and Mexico. Cheap labor in Mexico, cheap resources in Canada, and highly skilled labor in the United States. And when you look at car components, sometimes they cross the border 8 times going back and forth before they get put into the car and then go to your dealership. How much is that going to cost? 8 times, half a dozen times going back and forth across a border with this 25% levy?
These calls are so important later on today. This market hasn't capitulated. We've talked about that repeatedly. Jay Pawlowski made the point that this isn't shocking, it's not surprising. It's not shocking or surprising because he said it repeatedly on the campaign trail. But do you believe that this is the market reaction to 25% tariffs on Mexico and Canada? Do you believe that this is the market reaction on 25% tariffs if you're looking at the automakers, GM, Ford, and Stellantis? Because I would have thought, if you truly believe this holds, those moves would be much bigger than that.
Pretty much everyone would agree with you, I would argue, and you can see that from all the analyst notes saying that they expect them to be walked back. DataTrek, Nick Colas, put out a report. He took a survey on January 31st to see how many people believed that the tariffs would even go into effect on February 1st and would be announced. It was some 38% of clients thought that they would be announced on February 1st. This market has categorically rejected a lot of what Donald Trump has said as simply rhetoric, not fact.
And to some extent this morning, still, even with these moves, continues to look through it. So Colombia folded, and to some extent, Panama has as well, offering some concessions to the United States after a visit from Secretary of State Marco Rubio. The country promising free passage for U.S. warships through the Panama Canal. The country also vowing to leave China's Belt and Road Initiative.
So Mike Waltz, the National Security Advisor, took to Twitter and said this is a step in the right direction. I think it's a pretty big deal that Panama, after this one visit from Secretary Rubio, is saying we're going to pull out of Belt and Road. We're not going to reinitiate Belt and Road after 2026. We might even pull out sooner than later. And this comes as Rubio wrote in the Wall Street Journal that basically in the realm of diplomacy, this means paying closer attention to our own neighborhood, the Western Hemisphere. He's on an entire push in the Western Hemisphere, and he started with Canada, and the whole idea here is push China out.
So in November, I was in Peru. I was for APEC. China's presence was palpable all over South America. This is the opening salvo of saying, hey, wait a second, maybe not in some of the strategic areas. Very curious to see how much further that goes.
Some big pushback here, that's for sure. Let's turn to Mike McKee, our economics and policy correspondent, for the latest on these moves. Good morning, Mike.
Good morning, John. We know you're going to pay more money, and I know you were talking about what Mr. Waller thinks down at the Fed. It's a question of how long these tariffs go and how they're applied over time, because while the president's putting on 25% tariffs on Canada and Mexico, and Americans will pay that, they won't pay 25%. Importers are charged at the border. They can absorb some of that. They can, if they want to, and then the rest gets passed on to you, the average American who buys the product. But it depends on what products you buy and over what period of time. Now, imports will get cheaper because the dollar's getting stronger, so U.S. companies may also raise prices. We saw that with the steel tariffs, and that means more you got to pay on this end. Also, you have companies like Irving Oil, which owns a refinery in Newfoundland. They say they're going to pass 100% of the tariffs on to their customers in New England. The other thing to keep in mind is that we all pay for some things all the time, but you don't buy a car every day. So the impact isn't as straightforward as it seems. Most analysts at this point think that Americans are going to be paying about $800 to $1,200 more a month because of these tariffs. Now, these are just on Canada and Mexico, and to an extent, China. It's not Europe, it's not the rest of the world yet, and he says those are coming. And we've looked at some of the projections from Wall Street analysts. Goldman Sachs thinks we'll see about 7/10. Morgan Stanley a little bit less than that. Bloomberg Economics also 7/10. That's what it's going to do to inflation, just these tariffs. And GDP, you can see there's a wide range of estimates from a 0.4 hit to GDP to a 1.2% hit to GDP. It really depends on what you buy and when you buy it going forward.
And if it stays on. And I've read the same notes, Mike, and they all say the same thing. This will happen if they stay on. And Goldman made the point, Jan Hansius and the team over the weekend, that maybe this will be short-lived. Let's continue the conversation. Kellyanne Shaw, the former senior White House trade advisor to Trump, writing, "This is a high-risk, high-reward proposition. If it works, I would expect this to mark a new era in U.S. foreign policy, one in which a broader set of economic tools are on the table." Kellyanne Shaw joins us now for more. Kellyanne, welcome to the program. I just want to go back to the first term, because I think we all familiarized ourselves with Section 232, national security, 301, unfair trade practices. This was new over the weekend. They used the International Emergency Economic Powers Act. Kelly, what do people need to know about the use of that tool and whether it might be challenged?
Yeah, thank you so much for having me back on this morning. It's certainly an interesting Monday for any company who's operating in the United States, Canada, Mexico, and China, or have supply chains in any one of those economies. So IEEPA, right? This is the first time that a president has invoked tariffs on the basis of a national emergency. And IEEPA is a national security authority. It is different than 232 or Section 301, which supported the steel and aluminum tariffs and the China tariffs. Those had an investigation that made findings about the threat of imports or discrimination or unfair trade practices. This is about a pure emergency and national security issue, which the president has identified as fentanyl and illegal immigration.
So, Kelly, when the national security threat is resolved, what happens next? Do the tariffs get lifted?
Well, presumably. And if you look at the 3 executive orders that the president issued on Saturday, the legal basis for expanding the national emergency is the illicit flow of fentanyl and migration. So when those issues are addressed, presumably the legal basis for sustaining the tariffs would no longer be there. So my expectation is that these are tariffs that are targeted towards this national security issue, and that as soon as Canada, Mexico, and China and the United States are able to agree on a resolution, that the tariffs would go away.
Kellyanne, having been in the room, what is the chances that this gets resolved today and there's an 11th hour agreement before midnight?
Well, there's always a chance, right? I mean, this is a negotiation. The United States is requesting something from all 3 countries. And we have a call set up with Prime Minister Trudeau, President Sheinbaum today, with the president directly, which I do think is a good sign, right? These conversations have progressed to the top. And what was striking to me on Saturday, following the president's announcement and the issuance of these executive orders, was President Trudeau's press conference, in which he said he had not had conversations with the president all week about this specific issue. So I do think that a call is trending in the right direction, but whether or not what Canada and Mexico offer the United States is enough will be a decision by the president and the president alone.
In the meantime, markets aren't responding as much as some people would have expected. That could change should the tariffs go into effect tomorrow and continue for the foreseeable future. Neil Dutta put this out of Renmac. The most important thing is that Trump has said is that he doesn't care what the markets will do in response. Based on your time with President Trump, how much do you think he cares about the market's response?
Yeah, I mean, the markets are certainly something that the president watches very closely, but he watches a number of numbers every day. So he had 126 all-time highs of the market during Trump 1, which he was very proud of. He also watches the jobs numbers, inflation, the trade deficit, and other economic figures. But I think what you're seeing play out right now is the president's emphasis on border security. And he ran, of course, on the border and on inflation. And he is taking extraordinary steps to do something to tackle the #1 priority, which is addressing the illicit flow of fentanyl and illegal immigration. And he is willing to take the punch. And I think you saw that in his comment on True Social yesterday, as well as a comment he made to a press gaggle that there may be some pain here. So again, I think he is prepared for that, for whatever the markets might do. But once again, these tariffs are designed to be short-lived, that they would result in an outcome on these national security areas of priority, and that they would not stay in place indefinitely. And I think that's how the president and his team are likely viewing them as well.
Kellyanne, to that point, if this is a border security issue and it does come down to fentanyl, how much does it make sense to you that Canada has the same type of tariffs as Mexico, given the disparity in fentanyl imports from that nation?
Yeah, and I think if you look at the executive orders themselves, the one on Canada actually addresses this point. And it makes the point that the challenge is primarily at the southern border, but that there are Mexican cartel activities that are now happening in Canada, and that there are other things that the president is seeking in terms of concessions from Canada, in terms of addressing some of the illegal flow of fentanyl. So I think this is a stick. It is not a scalpel. He is certainly taking a maximalist approach to both Canada and Mexico in terms of this 25% across the board tariff. But this is something new. We have not seen this in modern U.S. history in terms of using tariffs and tying tariffs specifically to these national security objectives. But you're seeing it now, and it's partly experimental, and we'll see how it plays out.
We will see. Kelly, appreciate your time as always. Thank you. Kellyanne Shaw there, the former senior White House trade advisor to Donald Trump. Equity futures right now, I realize a lot of you are tuning in just to work out where markets are. We're down by about 1.7% on the S&P 500. With an update on stories elsewhere, here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. President Donald Trump's tariffs on major U.S. trading partners have led to a sell-off in cryptocurrency markets, with smaller tokens experiencing steep declines. The crypto market's total value has slid by about $360 billion so far today, with Bitcoin holding up better than the other tokens. Meanwhile, President Trump said the U.S. will halt any future funding to South Africa because of its new land expropriation law. The law allows the state to seize private land in the public interest, and in some cases without compensation, Trump claiming it would lead to the confiscation of land and mistreatment of certain groups. And Rory McIlroy won the AT&T Pebble Beach Pro-Am in California. He shot a 6 under 66 yesterday to win his first tournament of the 2025 season, which included an ace from 119 yards out. He won the tournament by a 2-shot lead and took home the $3.6 million prize. That's your Bloomberg Brief. John?
Yahara, thank you. 2 rounds of flawless golf over the weekend. 27th PGA Tour win for Rory McIlroy. It's good to see him back.
All I can say is that was Jonathan Farrow's moment of zen.
That was therapy for me over the weekend. Pebble Beach is beautiful. Have you seen that golf course?
It is beautiful.
It's gorgeous.
You're reliving that therapy this morning.
Just absolutely gorgeous. I knew what was coming Monday morning. This is it. Up next on the program, tariffs complicating the Fed's path forward.
We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be.
I think it's fair to say they've been articulated. That conversation continues. From New York, you're watching Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are created when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
A quick check on stocks and bonds. Stocks down across the board. We're off the lows, but it's not pretty. We're down by 1.7% on the S&P 500 in the bond market. We'll spend more time on this in the next hour. Yields are up by 4 basis points at the front end. They're down 4 on the long end on 10s. We're back to 450. Watch that space a little bit later. Under surveillance this morning, tariffs complicating the Fed's path forward.
I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be.
So here's the latest this morning. Tariffs casting down on further Fed easing. Bloomberg Economics predicting the levies could add about 0.7% to core inflation. Joining us now to discuss is the former St. Louis Fed President, Jim Bullard. Jim, welcome to the program, sir. So the Fed chair wants to wait to see the policies to be articulated, and I think it's fair to say they have been over the weekend. So, Jim, from your perspective, in your time at the Fed, once they've been articulated, did you just assume that they stay?
Yeah, I mean, this is one salvo in a trade war, and I think there's much more to come in various directions. This is mostly based on the fentanyl issue and the immigration issue, so it does seem like the three countries that are affected could take actions on those dimensions, and this phase would get ended. But obviously, the president campaigned on a trade war, and I think there's far more uncertainty in the future.
How much of a template, Jim, is 2017, 2018 in terms of the inflationary impact of Trump's tariffs to now when there are more goods being tariffed, but also there is a greater degree of inflation already baked into the system?
Yeah, I think the lesson from 2018 and 2019 was the GDP effect and blanket tariffs across the board of 25%, which were met by other countries, would have a big impact on GDP. And I think that would dominate everybody's thinking about it. The inflationary impacts, if they're there at all, would be a one-time effect and would be relatively minor. And that's what happened in 2019. The economy slowed down precipitously, and the Fed actually reduced rates, and I advocated for that at that time as the right response.
Back in 2018, 2019, I knew what the Vega would cost me. I knew how much gas was going to be. I had a sense of where prices were. Now, people don't have as much of a sense of where prices are to that same sort of granular degree. Do you think there is that risk that companies have the ability to pass along price increases in a much more direct and consistent way because of how conditioned people are post-pandemic?
Yeah, I mean, tariffs at this level are, you have to think about them a little bit differently. I mean, you go into the bar and there's a bunch of beer for sale, and the Canadian beer costs 3 times as much as all the others. I suppose you're going to buy one of the other ones and maybe not buy the Canadian beer. So I think prohibitive type tariffs just shut down trade altogether. I think for cars as well, maybe it's not a good time to buy a car if it's going to cost $3,000 more, $6,000 more, the kinds of numbers people are tossing around here. They can delay those types of purchases. So there's all the substitution that occurs with tariffs at this level.
Trump is also talking about putting tariffs on the European Union. So can you view this as a one-off increase in price level, or because he's talking about more tariffs, warning other countries that tariffs are coming down the pipeline, do you see this as an ongoing inflation threat?
Yeah, I mean, one way, so first of all, this order is about the national emergency on fentanyl and immigration. But if you just want to argue the economics, let's say with the EU, then I think it's what's the response of the EU going to be? A simple response would be for them to lower their tariff level to the average tariff level of the U.S. That would make a lot of sense. These are both big economies. I don't see why the average tariff level has to be all that different between the two places. And that's something that the president has argued for. And it seems like maybe now is the time to think about that. Why not have the same average tariff level in the two places?
Jim, is there any reason why the Federal Reserve wouldn't just look through any short-term inflation shock? Any reason to believe they'd be nervous about second-order effects in this building?
Yeah, I think, as we've talked about many times, inflation expectations are a critical thing. They have been going up a little bit, two-year tips up a little bit. So I do think that's a little bit concerning. But as I say, I mean, the lesson from before was that the growth effects are large or can be large, and that would tend to dominate any one-time increase in the price level.
Hey, Jim, appreciate your time, sir. As always, Jim Bullard there, the former St. Louis Fed president. Maybe some of that's getting picked up in the bond market with yields down at the long end, Lisa, and slightly elevated at the front end.
The whole concept of bear flattening, right? In the short term, yields go up. Long term, reducing growth, with the growth impact, the growth hit being the dominant thought that Jim Bullard had.
Were you looking to see if Canadian beer's on sale?
No, I was actually looking at the 10-year, but look,
right.
if Canadian beer, okay, but maybe people really like Canadian beer
Who drinks
from Mexico.
Canadian beer? Is that a thing?
I think Josh Wingrove.
Does he? Find out. All right. Up next, Katie Kaminsky of Alpha Simplex, James Picariello of BNP Paribas Exane, and Stephen Stanley of Santander, Earl Davis of BMO on this bond market. Up next.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
This is frankly nuts. Canada and Mexico are our two largest trading partners.
The signals he's sending suggest that he sees values and tariffs above and beyond even their negotiating leverage.
There are near-term inflation effects when you're implementing tariffs.
It could change on a dime, but I think once they're on, then it's harder to take them off.
We think that this could actually be highly disruptive to supply chains, potentially inflationary because of that disruption. This could weigh on growth and inflation in a more meaningful way.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Global equities heading south. 25% tariffs on Mexico, on Canada, an additional 10% on China. We are down across the board going into the opening bell 90 minutes away. Equity futures down by 1.7% on the S&P, on the Nasdaq down by close to 2. On a Russell, negative by 2.35. In the bond market, the next stop for this Federal Reserve is March 19th. How long will these tariffs last? Will they still be on when they get together the day before on the 18th? And they need to put together some forecasts at that meeting too. Yields are up at the front end, they're a bit lower at the long end.
What I think is actually going to be most compelling is what Jim Bullard, formerly of the St. Louis Fed, just had to say. He sees this as a greater growth shock than it is an inflationary shock. If that's the case, and we're seeing the hints of it in what's going on with the yield curve, does this actually indicate that the Fed can't cut rates and then that a downturn is more likely than some sort of resurgence in inflation?
In the FX market, as you might expect, the dollar stronger across the board against Canada, Mexico, and against the euro as well. Later on today, there will be a conversation between the President of the United States and the leaders of Mexico and Canada. What can they do to stop this from happening?
Well, we don't know yet. Trump did not offer an off-ramp or solutions that can assuage his concerns on why he's bringing up these tariffs in terms of national security issues when it comes to illegal immigration, it comes to fentanyl. He did say, though, after he said he's going to be getting on the phone with these leaders, I don't expect anything very dramatic. We put tariffs on, they owe us a lot of money, and I'm sure they're going to pay. We will also hear from the Mexico's president at 8:30. She's talked about this Plan B. Potentially we'll get details on what that means.
I think Mexico's different, and it's different because of foreign policy and what could happen next. Just follow the road of where things are going right now. First move from this administration, they get into power and they start talking about putting a terrorist designation on the cartels. Then over the weekend, they accuse the Mexican government of providing a safe haven for those cartels. Things are ramping up beyond just tariffs between Mexico and the United States.
And Pete Hegseth has pretty much said that all options are on the table, including a defense option out of the DOD when it comes to these cartels. And where's he going today? He's making his first trip to the southern border as the head of the Pentagon.
That's one to watch. This is what you've got to watch this morning in the next hour or so. Coming up, we'll catch up with Katie Kaminsky of Alpha Simplex. A stock slide on Trump's tariff threats. James Picariello of BNP Paribas Exane on the outlook for automakers. And Stephen Stanley of Santander on the Fed's next move. We begin with our top story. President Donald Trump slapping 25% tariffs on Canada and Mexico and 10% on China. Elsewhere, Trump doubling down, renewing his threat on Europe. Our team coverage starts right now. Bloomberg's Tyler Kendall at the White House. Bloomberg's Mike McKee standing by for more on the economy. Tyler, those calls between the President of the United States and the leaders of Mexico and Canada, do we know when they take place?
we're waiting for further guidance from the White House. We've yet to get their official schedule. But, John, it's interesting to look at as President Trump is rolling out these tariff plans, and he's broadly using them on this wide basis, right, as this all-in-one solution to tackle his immigration priorities and also rebalancing trade, but new questions about whether or not this could hit one of his biggest campaign priorities, which has to deal with tackling inflation, considering that he told reporters last night that Americans can expect to feel a little bit of pain. Bloomberg Economics saying that while the immediate impacts might come right off the bat, that consumer spending will likely see that squeeze over the medium and long term. Whether or not that could ramp up pressure, particularly as we see some retaliatory impacts from Canada targeting some Trump allies and also Republican states, remains to be seen.
Mike, when it comes to the impact of these tariffs, we just talked to James Bullard, who was talking about the fact that he sees more of an impact on GDP than inflation. So does the Fed just look through in terms of inflationary concerns and potentially as just a one hit?
Well, the Fed looks through it right now. The idea is that it would be a one-time hit to the price level if this were it, which is one reason that the Wall Street economists who are penciling this out are pretty much in agreement on what we're going to see in inflation, around a 6 to 7/10 boost to PCE. But if he puts tariffs on Europe or the rest of the world, then that just adds to the whole thing. Growth, as Jim said, is going to be a bigger issue because it takes it's a longer period of time in which you buy these things. So there's a wide dispersion between Goldman Sachs, which thinks we'll see growth down about 4/10, and Bloomberg Economics, which thinks it could be as bad as negative 1.2%.
Mike, at a certain point, the dollar strengthening offsets a lot of the potential inflationary impacts. How much are people looking at that as one absorption tool, that the depreciation of other currencies can really take on a lot of the increase in potential prices?
Well, that is the main argument that Trump administration officials are making for why this won't hurt Americans all that much. But you have to remember the dollar has been strong for some time, so the movement that we're going to get may not be that great overall from these tariffs, and that might keep things a little bit less good news for overall American people.
Mike McKee on the latest. Thank you, sir. Alongside Tyler Kender. Watch this space. We'll catch up with Tyler hopefully a little bit later. We're waiting for those calls between the President of the United States, Donald Trump, and the leaders, of course, of Mexico and Canada. Also follow what the leaders of the provinces across Canada are doing as well. So this comes from Ontario. The Premier, Doug Ford, commenting in a post on X, saying the following, that they will ban US companies from provincial government contracts, and also going on to say, and I think this could be a space to watch, ripping up Ontario's contract with Starlink. Is that going to be the perceived weak spot of this administration, going after the companies of Elon Musk?
Potentially it's a vulnerability given the fact that Elon Musk now has an office in the old executive building. He's very close, has this proximity to power that no other executive has when it comes to Donald Trump. So maybe this is a way they can try to needle their way into the Oval Office. Interesting, Doug Ford has been for the past 2 weeks sporting a hat that looks like a MAGA red hat, but it's blue and it says Canada is not for sale.
What's interesting is it's all trying to appeal to potential factions that could influence Trump. It's going after red states and products there. It's going after Elon Musk. It's almost as if Canadian leaders are saying, where are the adults? Someone rein him in. This doesn't make any sense. Why can't you get on board? And so they're going after very specific people who could potentially get Donald Trump's ear.
We saw this playbook from China back in 2018 and beyond, didn't we? Is it going to work this time?
Right now, it seems like maybe down the line, but right now the market's not responding in a way that could really foist that pressure potentially on some of the allies of Donald Trump.
I would say China's still using that playbook. It was just a few weeks ago that we reported that it was Elon Musk that China thought would be a good shepherd to take on TikTok, hand-picking someone that they have a tremendous amount of business with when it comes to Tesla.
Just to confirm, that headline we just got across the Bloomberg terminal, Ontario government cancelling its contract with Starlink. That's one to watch. One to watch also in the bond market. Check out what's happening with 2-year, 10-year and 30-year yields. So far on the session this morning, yields are up at the front end. They're a little bit lower, further out along the long end. Katie Kaminsky of Alpha Simplex needs to explain just what is going on. Katie, let's get to it. Let's start with the long end. Is this bullish or bearish for bonds?
I would say it's definitely a bearish signal in the sense that you're seeing risk off today. So when I'm thinking about the bond market today, I'm thinking about the market reacting to concern, to fear about inflation, to fear about just sort of the impact of these tariffs. So in theory, if we worried about inflation, we'd expect yields to actually go up. But I think the short-term response is fear. It's people buying long-term debt because they're concerned about the trajectory of the equity market right now.
At this point, Katie, do you think that this market seems more concerned about a growth shock or an inflation shock based on the trend lines that you're looking at?
This is actually a really, really tough question. And the reason I'm glad you asked it is that that's what we're trying to figure out right now, is that, is it inflation or is this going to be something that actually impacts growth if we have sort of enough negative impact? So I think right now, just looking at how market reactions cross asset today, the biggest theme is risk off. But that doesn't mean that over the next couple of days, as we start to parse through the implications of this, that might shift somewhat more to a growth narrative. What's the impact on growth?
My head is trying to grapple with all of the implications here. One of them, and the dominant move, has been strong dollar, consistently across the board. Do you see that continuing at a time where if the dollar continues to strengthen, that becomes a headwind to international companies in the United States? It becomes a headwind to earnings. It becomes a headwind to some of the exceptionalism that people have been talking about.
Definitely. And, Lisa, what's really interesting is if you look at the dollar over the last couple months, we actually were worried about, this trend has already gone so far in the U.S. dollar. The U.S. dollar is up so much. And then having the reaction that we had today, that's going to put the dollar in an even more favorable position, which is going to make things very expensive for purchasing in dollars. And it's also going to impact commodity prices globally. So I think in some sense, there is going to be a pressure point if the dollar goes far enough that it actually has a big impact on sort of export and demand.
Katie, when you look at market reaction this morning to these type of tariffs, 25% on Mexico and Canada, as well as 10% on China, but they're only going to happen after midnight tonight. Do you think the market is pricing in an 11th hour deal?
It's possible. I mean, I think what really is interesting to watch is that if you look at how the market has reacted to this news, it was much more extreme initially. So I think we're going to have to keep watching tonight. We might see a more extreme movements, but then things tend to subside. So I think there could still be some movement to come tonight. And that could be because people are hedging on whether or not there might be some side deal or some way to sort of negotiate around some of these decisions.
So where do you think people should look to hide?
Well, this is a good question. And I think where people are hiding is actually by buying the dollar and also by buying long-term debt as something to potentially hedge against the shorter-term impacts on the equity market if this becomes sort of the pain point that was already mentioned in terms of that it might cost Americans a little bit more. So clearly, fixed income in the short term seems to be the solution that the market's leaning to, and also the U.S. dollar and energy prices as well. So things that are going to benefit from inflation or protection.
Katie, I just want to gauge sentiment this morning. I'm not going to hold you to this. Do you think the next move will be a hike or a cut at the Federal Reserve, based on what we heard over the weekend?
Oh, this is a good one. I mean, because really, if this becomes a growth story and the growth story that Bullard was talking about, then I'd say no cut. But also, if we see inflation growing and we sort of have that threat, then again, no cut. But if we see detrimental economic impacts of these tariffs, then we might actually pivot to potentially having a cut for that concern. So I think that's where it's really tricky. There's multiple different avenues that we could go based on these decisions this week.
Katie, appreciate it. We're all trying to process the same thing in different ways. Katie Kaminsky there of Alpha Simplex with the latest. I was saying earlier on that we'd like to hear from the NEC director. He has spoken to an American broadcaster just moments ago, and one of the headlines that came from that was, this is about drugs. It's about a drug war. It's not about tariffs. The issue is 100% about drugs, not about a trade war. Well, the issue with this, of course, is this is something they have to say because they used the International Emergency Economic Powers Act and justified this act by making it about fentanyl and the border.
Right, they made it about national security by using that act. And when you look at the fentanyl numbers from Mexico, this is a huge problem. This is something Trump has run on in his inauguration speech. He said he thinks immigration is the reason why he won, not when it comes to things like inflation, although obviously these tariffs could be inflationary.
It raises the question, what can Mexico do to have the tariffs removed and eliminate the threat? That prescription has not been laid out, and it's one reason why people don't understand what the off-ramp truly is.
If there is one, can we negotiate this? And we'll see if we can on these calls if they take place a little bit later on today. Equity futures on the S&P doing okay relative to the losses earlier on in the session around midnight. They were pretty steep. We're down by about 1.5% on the S&P 500. With an update on stories elsewhere with your Bloomberg Brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Investigators have uncovered more information about last week's plane crash in Washington, D.C. NTSB officials told reporters that the Black Hawk Army helicopter was flying more than 100 feet higher than it was authorized. We also learned the unit was on a training mission to evacuate government officials in the event of a catastrophe. Meanwhile, President Trump's tariffs against Canada and Mexico are threatening production for automakers across North America. The duties would immediately hit almost a quarter of the 16 million vehicles sold in the U.S. each year. And Wolf Research analysts are estimating it could raise the average price of a new car by about $3,000. And a big night for Beyonce. She won her first album of the year at the Grammys last night for her album Cowboy Carter and became the first Black artist to win Best Country Album. Kendrick Lamar won Record and Song of the Year for Not Like Us, while Chappelle Rowan was named Best New Artist. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the programme, we'll get you some morning calls. Plus, we'll catch up with James Picariello of BNP Paribas on the pressure facing the automakers, with GM down right now by 7%. From New York, this is Bloomberg. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
The opening bow 1 hour and 12 minutes away. Equity futures attempting to recover, but still down by 1.5% on the S&P, negative by 1.7 on the NASDAQ. On a Russell, your underperformance there. We're down by 2 full percentage points. That's the price action. Let's get you some morning calls. First up, Loop Capital downgrading FedEx to hold, highlighting further weakness in cross-border flows from tariffs. That stock down by 2.3%. Your second call from D.A. Davidson downgrading Lifetime Brands to neutral, citing exposure to recently announced tariffs and weak European profitability. That stock's down by close to 6%. And finally, Piper Sandler downgrading Constellation Brands to neutral, noting pressure from President Donald Trump's tariffs. Another stock, another name that's down by about 4% in early trading. Let's turn to the autos. U.S. car makers slumping in pre-market trading as they prepare for the impact of Trump's tariffs on Canada, Mexico, and China. James Picariello of BNP Paribas writing, we can be looking at a total tariff cost of about $46 billion. And we get to an average price increase of $2,900 per vehicle. James joins us now for more. James, it's good to see you. Thanks for dropping by.
Thanks for having me in.
Let's go with that 2,900 number, okay? How much of that is going to be passed on to the end consumer? Just assuming for this conversation, for the purpose of this chat, that these tariffs will hold, they will stick.
Yeah, so 40% of that 2,900 will be supplier costs, so supply chain costs. And the few suppliers that have reported their earnings already have discussed the tariff topics, the topic of tariffs, and have said they need to pass that on to their customer, the automaker. And so, of course, the automaker's left with this decision of, I mean, they're going to have to try to pass on whatever costs they incur. Now, the interesting thing is, I mean, a $2,900 price increase, you add on the 10% tariff levied against China auto parts, that's another $100 per vehicle, so you get to this clean $3,000. The only reason why the industry grew their U.S. sales in 2024 was because OEMs started to discount their pricing through incentive spending. And, you know, to think that now for 2025, we're conceiving price increases, I mean, there's almost no way that the industry would be able to sustain growth.
General Motors has been hit hardest. It's already down 7% so far this year. It's now down about 6% in pre-market trading, actually now almost. But I'm curious going forward about what they could do to potentially offset this tariff risk at a time when Mary Barra said that she does have a game plan, but hasn't outlined it.
Yeah. Yeah, it's really, the linchpin there is going to be excess U.S. capacity, right? The average capacity utilization for a U.S. automotive plant is 65%, 63% to be exact. So there is a lot of excess capacity at existing plants. And I think the negotiating lever will have to be OEMs committing a portion of their Canada and or Mexico production, bringing it back to the U.S. I think that's the only negotiation chip that the automakers have, because a 25% tariff truly, you know, it brings into the question, you know, an existential threat.
How much is that going to cost, though? Because the reason why they build these cars in Mexico is because the labor is so much cheaper.
Yeah, so it's a great question. So if we go through the 25% tariff rate with the OEMs not doing anything, with GM, let's focus on GM not doing a single thing, that's at least, as in my calculation, $7 billion in tariff costs if they don't do anything. And then you add on maybe $4 or $5 billion of supply chain costs, right? So we're almost wiping out their entire EBIT under a 25% tariff rate. If they move, let's say, 300,000 vehicles from Mexico into the U.S., which would be about half of their total imports from Mexico and Canada, that would be the major cost differential would be labor, and that's only $1 billion. We say only $1 billion because we just walked through wiping out almost their entire EBIT.
James, you just said an existential threat if it stays on. I mean, I've got to ask you the question. Are you suggesting that if we kept these tariffs, one of these companies is going bust?
Well, what happens first? A tier 2 or 3 or 4 supplier, a company name that that we don't know of, goes bust, right? And it just takes one component, one subsystem to throw a wrench, throw a bottleneck into the entire production lineup, right? So that's where it'll start, and then it'll cascade all the way up.
Is there a precedent for this?
Well, during Trump's first administration, the first, let's call it threat, was a 25% tariff, right? So we all imagined the rewrite of NAFTA, and that original threat was 25%. What ultimately happened there, right, we do have something to point to in terms of a favorable negotiation outcome between Trump and these two countries, or two partners. What ultimately happened was there was no additional tariff, and there was just a very manageable additional sourcing requirement in terms of the U.S. value add. Very manageable. No OEM has talked about it since. So yeah, I mean, that's the president. The president is quite reasonable.
So ultimately, do you think that's what he's trying to do? Just bring up the renegotiation of USMCA?
Yeah, I mean, I imagine, you know, he clearly wants more, right? Because USMCA, what we have now, the rewrite. He negotiated. So he wants more. And the 25% tariff will get every automaker with exposure to the negotiation table. I think ultimately, you know, if you conceive, we import 4 million vehicles from Canada and Mexico. If GM commits 300,000 and a host of other OEMs commit a portion, right, you get to 1 million units, right, a quarter of total imports that now suddenly get moved to the U.S. I think the aesthetics of that would be a great win for the administration, and the costs are manageable to each automaker. Right? It's not a net positive, but they're manageable costs.
Have you still got an outperform rating on GM?
I do.
Nothing you said makes me feel like you've got an outperform rating on GM.
Well, I'm playing for the $1 billion additional labor costs, right? That's the manageable piece.
Is there an underlying assumption then that this just doesn't stay on? These tariffs don't hold?
That's the underlying assumption right now. Yeah, for sure. I mean,
Where would the jobs go if GM were to move some of the jobs from Mexico and Canada to the United States? What location, what states are those plants in?
Oh, I've got all the plants mapped out in my head. You know, yeah, I mean, it would be a host of plants, right? You know, one in Michigan. I'm forgetting the states, but I mean, there are 3 or 4 GM plants that produce the same nameplates, the same platforms as those that are produced in Mexico. So it would be a rather seamless transition, not cost-free, not interruption-free, because suppliers also need to retool for that additional volume. But again, it falls under the manageable.
Can I ask you a question that might sound really dumb? As an analyst, how long do they have to stay on before you change your mind that they're just staying on permanently? Would you revisit this in like a month, 2 months, 3 months?
Yeah, it's going to be an everyday thing. I mean, truly.
Day to day.
It's going to be a day-to-day thing.
Okay.
I mean, we're forced to be in that situation.
We'll be right here, market to market, every single day. James, it's good to see you. Thank you.
Thanks.
James Picariello there of BNP Paribas Exane. It is difficult to make calls, given there are a lot of people out there that think that this can be negotiated away in the next few days.
That's been the previous precedent. There is no precedent for these staying on at this level.
Up next on the programme, we'll catch up with Stephen Stanley of Santander. And I know you've all got questions about the bond market. Just what is going on? Is it bullish or bearish for fixed income? El Davis of BMO, just around the corner.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
At some point today, there will be a call between the President of the United States and the leaders of Mexico and Canada, and it could move markets much more than a news conference with Chairman Powell. How this goes, one way or the other, we'll see, but right now futures are down hard. We're heading south. We're negative by 1.5% on the S&P. On the Nasdaq, we're down by 1.7. On the Russell, we're down by more than 2 full percentage points. With your morning movers, here's Manus Cranny. Hey, Manus.
Jonathan, that's the personification of the test of endurance. And therein lies the conversation you just had with BNP Paribas on GM. How long will these tariffs last? When does it push a double-digit drop in terms of earnings? That's the view from RBC. The worst-case scenario for Tom Narayan over there is a double-digit hit from tariffs, 21% on GM. To give you some context, a Chevrolet Montana costs $25,000. As of tonight, if these tariffs go through, that goes up by $6,250. What can GM transfer from Mexico into the United States of America? You've just heard it there from BNP Paribas. 3 main plants have the same assembly line and the same structure. Will it come to pass? Constellation Brands, when it comes to Mexican beers, Modelo, Corona, and Pacifico, imported from Mexico into the United States of America. What's the margin hit? Piper Sanders say that they moved to neutral from overweight on this. Again, this is the reality of the potential of tariffs on what you import from south of the border here to the United States of America. Now, NVIDIA, definitely under pressure, and if we continue on this trajectory, last week in the cash market down 15.8%. If you continue at this trajectory and pace in the cash market, there is a real risk that you re-enter a bear market. Pre-market, we very, very closely dip towards that. A bear market from last Monday to this Monday, from DeepSeek to tariffs to chips, that is the consequence, down almost 20%. Where's the YOLO? Where's the Momo? That's what I want to know. Amy Wee Silverman says the skew is very, very elevated. The market is racing relentlessly to buy puts and protection on the downside. Good morning.
NVIDIA was down 16% last week. It's down another 4 so far this morning. Manus Cranny, thank you. The focus of the world right now, with regards to financial markets and the global economy, very much on one thing: Trump's tariffs on Canada, Mexico, and China, and the prospect of throwing some more at the European Union. Stephen Stanley of Santander saying tariffs are likely to be negative for growth, especially if there is retaliation. Stephen joins us now for more. Stephen, good to see you.
Good to be here.
Chairman Powell in the news conference said he'd wait to see policy articulated, and we've said this morning a few times that it has been. What does he do now?
I think you have to wait. I mean, I think this is a day-to-day thing. President Trump is speaking with the leaders of Canada and Mexico. There's at least a non-trivial chance that we'd never see these 25% tariffs.
On the margins, though, given that a lot of companies aren't sure what to do with this, Jim Bullard, the former St. Louis Fed president, was earlier on in saying he sees this as more of a growth shock than an inflationary shock. Based on everything that you've read and seen so far, would you agree?
Totally agree with that. Totally agree. So the inflation story's been the one that's gotten the most run in terms of tariffs. But the problem with that story is that tariffs are a one-time change in the price level, right? It's not a persistent change in the rate of change of prices, which is inflation. And so in theory, the Fed is supposed to look through that. I realize easier said than done. But if you go back to 2018, I know very different economic landscape, But the main issue back then was growth, not inflation, and it definitely had a significant impact on growth.
The argument that people make against this is that the U.S. economy is so strong, and this is such a minor hit, that the U.S. will power through it, and it will barely show up. Why do you disagree?
Well, we may very well get through it. I don't think this would necessarily be inflationary, given that the economy does have a lot of momentum. But I do think that the growth hit would be significant. We would notice it for sure. And I think, again, if you go back to 2018, 2019, it seems to me that the biggest takeaway from that experience, at least for me, was it wasn't so much the tariffs themselves, it was the uncertainty in the environment that it engendered. And I think a lot of businesses were, taking a step back until they had a better idea of what was coming at that time. And now I think businesses are already in that mode. They're waiting for tax changes, regulatory, in addition to tariffs. And I mean, if I'm a business person, I'm not making any, I'm not making any big decisions anytime soon.
The other side of that growth, though, is what if there is a 15% corporate tax rate if you produce in the United States? Right? Isn't that the carrot and stick approach?
Well, this is what the president is aiming for, is he wants to bring production home. I mean, I think that's realistic perhaps for some industries and not so much for others. But yeah, I mean, it is a mix. I think that if you look at the administration's proposed policies in a totality, the tax piece and the regulatory piece are likely to be very positive for growth. And then on the other side, you've got tariffs and maybe to some degree immigration. He's leading with tariffs, which it seems to me maybe not the right way to go, because that's the one that has the potential to be negative for growth. But, we'll see how that plays out. I mean, I think it's, I'm not a political analyst, but my sense is that for him, this is all a negotiation. The point of this isn't to slap tariffs and slow the economy down. It's to get what he wants from Canada, Mexico, China, and others.
And he's flirting now with the European Union. Last night he said it'll definitely happen with the European Union. So in that sense, how do you model all of this if it's basically just going to be paralysis, businesses waiting on the sidelines? Because they could be waiting for months or years.
Yeah, it's definitely a moving target. I mean, when you think about are the tariffs going to happen? Or are they not going to happen? Then if they are, next question, are there going to be exemptions? Are certain industries going to get, which that happened a lot. And there were a lot of exemptions in Trump's first term on the tariffs that were imposed. How do our trading partners respond? Are they retaliatory? Do they want a deal? How does the broader economy respond? Do producers and retailers pass everything through? Do they eat some of the margin? There's so many questions that I think it's impossible to have a precise estimate. I mean, I think we know the direction, but I don't think the magnitudes are very difficult. You can kind of throw numbers out there, but it's all very tentative at this point.
Well, can we throw some numbers out there? Just a few. Let's go back to 2018 and talk about the experience from 2018. We know a whole different range of things can happen. Exporters can drop prices. We can eat it on the margin. It doesn't all have to get passed through to the consumer. You would be the first to say that's very dependent on what goods and what sectors, and I would agree with you. What did we learn from 18 about what corporations did then? What happened then?
Yeah, I think the difficulty is that the environment is very different now than it was then. I think back then, inflation expectations were incredibly low. Firms had very little pricing power, and I think in many cases they were forced to eat at least some of the cost increases. This time around, firms have a lot of muscle memory raising prices when their costs go up.
Do they have pricing power right now?
We'll see. We'll see. I think that consumers are probably, the anecdotal evidence is that consumers have started to fight back a little bit. But at the same time, again, consumers also have muscle memory in paying higher prices. And if it feels like tariffs is a good reason, then maybe they're more inclined to accept it now than they would have been in 18.
If we still have these tariffs by Friday, what am I looking at the payrolls report for? Is it of any use at all?
I don't think it's irrelevant, but I think it's definitely going to be the case that the markets are going to be paying a lot less attention to the normal data flow than they would have otherwise.
That's for sure. Stephen Stanley of Santander. Stephen, thank you, sir.
My pleasure.
Appreciate it. Let's get across to Mike McKee, our economics and policy correspondent. Mike McKee, that jobs report is just around the corner.
Yeah, you and Steve did a really good job of undercutting what I was going to say here about how important this week is, because as long as the tariffs stay in place, that's going to be the focus. And the idea, as Steve was talking about, it's really hard to put numbers on this, is very important. We get some numbers this week that normally would be very important. We get ISM today, the manufacturing numbers, and then on Wednesday we get the services numbers. We also get ADP and, you know, how people trade on that. And then on Friday, the payrolls report. But do these things matter at this point? Because the Fed is going to be watching tariffs as well as the markets, and they've got to figure out what the impact is going to be. We don't really have a good idea. Now, we do get a lot of Fed speak this week, so that's something to focus on, including your friend, Chris Waller, is speaking on Thursday. It's not on the economy specifically, but he might make some remarks. And then we get two from the vice chair, Philip Jefferson. So a lot to watch for this week in terms of the Fed and the economy. It's just a question of how much it's going to matter.
Mike, that's an important calendar. I agree with you. I really agree with you. Looking forward to Governor Waller later on this week, and let's see if we can get him to comment on what's happening with the general economy. Need to get some comments on this bond market. So the two-year yield right now is higher by 4 basis points. If you go further out along the curve, you'll notice that yields are down by a basis point or two on a 10-year, 4.52. Is that what you were expecting this morning? Let's cross over to Earl Davis of BMO, who has more. Earl, welcome to the program, sir. I've asked this question a few times already today. Is this bullish or bearish for treasuries? Which one, Earl?
It's bullish for tips, not treasuries. And tips will outperform both on a rally, as we're seeing today in the 10-year sector, and they will outperform on any sell-off. The reason why it's hard to answer that question ultimately, other than tips, is that the market only has the ability to focus on one narrative at a time. And there's 4 possible narratives that could happen now. 1 is inflation, 2 is growth, 3 is risk off, and 4 is fiscal. 2 of those, inflation and fiscal, are negative on bond yields, and 2 are bullish. That's risk off and growth. The risk off is what we're seeing now, combined with the inflationary fears.
Do you think on the tax, on the fiscal, Earl, that actions like this make it more likely than not we'll get bigger tax cuts than some people expect?
Yeah, it could go both ways. There's so many unknowns. That's why we said our approach is, you know what, we expect nothing, but we plan for everything. And so that we could take advantage of it now. So it's possible, but there's so many unknowns, right? What is the revenue actually used for? How long does this last? So if it's a short-lived tariff war, then we can expect to see more pressure on fiscal. But if it's longer-lived, then yes, it does help to fund tax cuts and other spending choices.
Earl, do you have a base case going into this evening? Because after midnight, they're coming on unless there's an 11th-hour deal.
Yeah, you know, it's one of those things where, you know, you hope for the best, prepare for the worst. So our base case basically is, and we don't have a base case, but it's to react to the market, to acknowledge when a narrative has run out. And I named the 4 things that we're looking at as possible narratives. If you were to ask me right now, the way I believe I see this going is, first you have your risk-off trade. You're seeing that through credit spreads widen. You're seeing that through a rally in nominals and tips, even though tips are rallying more than treasuries. So we'll have this risk-off first. Then if the tariffs are implemented and grow, there will be inflation fears. And the reason why I feel there will be inflation fears, COVID has conditioned consumers to accept price hikes faster. So I believe there'll be a rapid flow through of any price increases of tariffs into prices here. So you'll have that inflationary aspect. But as your previous guests seen, this is more of a growth shock as it stands right now than an inflation shock. So I think the second half of the year, you start getting that tremendous rally in bonds. So it's very interesting, the possible sequencing of this. One thing I do want to highlight, there's one thing where it changes this to an inflation shock from a growth shock. I do believe it is a growth shock on the real economy, but what changes it to an inflation shock is if you get money printing, if you get QE again, because that's putting more cash into the system, which will fuel the inflation and fuel growth. So it's one thing to watch out for where it could pivot from a growth shock to an inflation shock.
Earl, do you think it could be more inflationary as well if we get more tariffs? Trump last night is talking about the fact that they're going to be coming as well when it comes to the European Union.
Yeah, you know what? It's a very interesting thing. This is why I brought up QE. So if you think of the economy, U.S. economy, as a pie, the pie is not changing shape without any QE or QT. It's one solid size. Now you bring in tariffs. People have to spend more. So the bigger piece of the pie is now going for tariffs, that for inflation and to pay prices. That means there's less that goes into investment. That's why without QE, you do get a growth shock ultimately. But there is a very large potential. I think the trigger for QE or something more stimulative is the risk off. You start getting a big sell-off in risk assets. I do think the Fed put is in play, and that is adding stimulus to the market. So there's so many dynamics here. You have to, but there's opportunity as well. As long as you map it out and look and wait for the opportunity and right time to strike, that's what we're doing, and I gave you the process of how we're kind of looking at it.
Oh, just briefly, though, do you think the threat, just the mere possibility of inflation picking up again, does constrain the Fed put, the Fed's bias to ease?
No, not at all. Fed puts in play. And the reason why is because we're still, we're not at the peak of inflation. We're not where we were in 2022, so they still have room. And the reason why it's in play is because of that potential growth shock. So they could look through, they could say we're looking through this supply shock because we do see depressed demand, and we're going to address the depressed demand because we believe inflation will ultimately end up in the range that we want, that 1 to 3%.
Oh, you're one of the best. Really thoughtful stuff. Appreciate your time. Thank you. Earl Davis there of BMO. Big debate about what this means for the US economy and ultimately the Federal Reserve and, of course, US fixed income, the Treasury market. At the moment, and not my opinion, just based on the opinion of market participants and where things are trading over in Europe, there's no debate. This is just bad for growth and ultimately could lead to further disinflation. If you put the walls up in America and you have to eat the overcapacity coming out of China, it's the Europeans that will do a lot of that eating. Yields are down across the curve in Germany. The 2 year's down 7 basis points. The 10-year is down 6. And I think that speaks volumes on this morning, where there is some confusion about what it could mean for treasuries. I think there's very little confusion about what all of this would mean for the European bond market. Let's get you an update on stories elsewhere this morning. Let's cross over to Yahara Hackers for your Bloomberg Brief. Hey, Yahara.
Hi, John. President Donald Trump says he will have separate calls regarding tariffs this morning with Canadian Prime Minister Justin Trudeau, as well as Mexican President Claudia Sheinbaum. Trudeau has already pledged 25% retaliatory tariffs. Plus, Ontario's premier said his government is ending its contract with Elon Musk's Starlink. Meanwhile, President Trump's tariffs include plans to get rid of an exemption for packages worth less than $800. Retailers, including Temu and Shein, have exploited the loophole for years to quickly expand in the U.S. Critics say the flood of packages from China is hard to monitor and may contain illegal or dangerous goods. It's a trade most are calling the most shocking in NBA history. The Dallas Mavericks sent their star forward Luka Doncic to the Lakers for Anthony Davis. It's the first time in league history that 2 reigning All-NBA players were traded for each other during the middle of the season. That's your Bloomberg Brief. John?
Yahara, thank you, and thanks for this morning. I'm told by my producer, Jamie, this is the worst trade in NBA history.
Maverick fans are literally going nuts. They do not understand why they would do this trade. And for them, it makes no sense. Maybe we'll find out why.
Still struggling to make sense of it this morning. Up next on the program, we'll set you up for the day ahead. You're watching Bloomberg Surveillance.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready.
Go.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening bell is 40 minutes away. What a start to February after closing out January with a decent month of gains, up by almost 3% on the S&P. On the Euro Stoxx 50 last month, up by about 8%. Massive rally in European equities. As you look at these moves, and we're down across the board on the S&P by 1.6, on a Russell down by 2.3, and you look at the losses in Europe, you've got to remember why we saw that outperformance in Europe. And yes, positioning was part of that story. But also, I remember the first week of Trump's second term, and we're sitting there in Davos, Switzerland at the World Economic Forum, and people are hopeful because we didn't get tariffs in the first week that we might not get them at all.
There was a feeling that this was a president who was willing to negotiate and not necessarily going to be as harsh. Today, that basically has been shattered. Just wait. And it's sort of a question of what can he get done sooner versus what he's going to get done later.
Well, he still may be willing to negotiate. There is a phone call this morning, and I think we should see what comes out, a readout out of that phone call. I mean, these tariffs are set to take place after midnight, and he's getting on the phone with both these leaders, so let's see.
You've heard the bullish argument repeatedly. Does it still stand? There is scope for negotiation. It's transactional in nature. It's constrained, driven by the equity market to some extent, and the backdrop for the economy is good. Does all of that still hold after the weekend's actions?
Well, some of the bricks have been taken out. I will say he did say that UK is immune to potential tariffs, which I thought was sort of notable. Not sure exactly how Keir Starmer got on his good list.
That's a Brexit win, Bramo.
But okay, all right. Well, at the same time, Keir Starmer isn't necessarily, well, anyway, we don't have to get into that, but it sort of erodes that argument. But I think Stephen Stanley's point about the uncertainty and how much that weighs on business confidence, as well as a strong dollar and what that does to corporate earnings, that might be the most salient story as we wait for more certainty.
The direct line was that the UK is out of line, but the European Union, they're an atrocity, according to President Trump. That's what he said last night. But I wonder, when you see the S&P 500 down 1.6%, is that enough for him to say, time to walk in and negotiate? Or maybe he'll look at that and say, well, they're not completely tanking, and actually double down on places like the European Union.
I don't know, but we did see a much bigger drawdown back in 2018. Much bigger drawdown than this. This is nothing.
People are treating this playbook like 2018, negotiating tool taken off. And that, I think, is really the key question. Is that truly the case? And if it's not, how long does this go on before you start to see some pretty major shifts by corporate executives?
We are hitting the ground running to kick off the month of February and a brand new trading week. Your week ahead kicks off like this. Later on today, Anne-Marie said it, we'll have 2 calls with the leaders of Mexico and Canada and the President of the United States. That's it. They are the big ones to watch a little bit later. How much scope is there for negotiation? On Tuesday, if we don't get any of this sorted, these tariffs go into effect on China, on Mexico, on Canada. And then, look out for this too, the Israeli Prime Minister Benjamin Netanyahu is visiting the White House, so that could be a busy day on Tuesday. On Wednesday, we get the ADP jobs report, we get some Disney earnings as well. On Thursday, another round of jobless claims, plus the Bank of England rate decision. Then on Friday, it's the major one. On Friday, outside of all the earnings, the jobs report is just around the corner. Bloomberg's Tyler Kendall joins us now at the White House ahead of the conversations between President Trump and the leaders of Canada and Mexico. Tyler, this is the big focal point for the market later on today. Ahead of those calls, you caught up with the National Economic Council Director, Kevin Hassett. What did Kevin have to say?
Well, John, I pressed him on what sort of benchmarks of progress Mexico and Canada would need to meet in order for President Trump to ease or lift these tariffs. And he said he didn't want to get ahead of the president's calls with the foreign leaders this morning, as we still await guidance and also a readout on what might have been said during those. But he did want to make clear to me that the administration says that they don't feel that this is a trade war. Instead, they feel this is a war against illegal immigration and drugs coming over the border. Now, when I asked him what sort of economic impacts that Americans might be feeling, particularly after President Trump told reporters yesterday that there might be a little pain, he said that he feels that inflation will go down due to supply-side shocks. It's clear that this White House is trying to bank on a boost to U.S. domestic manufacturing from these tariffs. But as we spoke about earlier in the show, not everybody agrees with that. The National Association of Manufacturers, which represents about 14,000 businesses here in the U.S., in a statement to Bloomberg News said that these tariffs will send ripple effects and severe impacts for all of their members nationwide.
Tyler, did you get a sense from Kevin Hassett if it is that last point, boosting American manufacturing, or it is using IEEPA, a national security concern? What is driving these tariffs?
Right. Well, as we've spoken about before, it's very clear that there's kind of this one-size-fits-all tariff when it comes to President Trump to address multiple of his campaign priorities, including rebalancing trade and also immigration. Now, the Trump White House is going to put forward that they are going to enact these under emergency powers and invoke this national emergency. Whether or not that holds up to legal scrutiny, we'll have to wait and see. But it is clear that they are trying to also paint this in a positive light for U.S. manufacturers. We saw, for example, some Republican senators get on board with that. Senator Bernie Moreno, an Ohio Republican, said that his state's open for business. Of course, they're a big producer of steel, while we're also watching some other senators. I got a statement from Senator Ted Cruz, for example. Texas is the largest trading partner with Mexico. He told me in a statement last night that he actually wants to see trade expanded between the U.S. and Mexico, that all the players need to come to the negotiating table for that to happen.
Tyler, appreciate it. Tyler Kendall there, Bloomberg's very own, outside of the White House. Tune in tomorrow. Dan Ives of Wedbush on tech. Lots of earnings this week. Sarah Hunt of Alpine Saxon Woods, the former deputy U.S. Trade Representative Sarah Bianchi, and Greg Deco of EY joins us as well. So the trade war begins. 25% tariffs on Mexico, on Canada, 10% levy on Chinese products. The big question this market's got, how long will it last? And will it even start? From New York City this morning, good morning to you all. This was Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me. And I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. Or in Asia, deregulation. So the fact is that U.S. banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Maybe Trade War 2.0 wasn't priced in after all. 30 minutes until the start of trading, I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
And coming up, after weeks of threats, President Trump makes good on his pledge to impose tariffs on Canada, Mexico, and China. And now he says Europe may be next. That move threatening to hobble the U.S. economy and push up prices for consumers. Businesses and investors bracing for that fallout. And Wall Street weighing in as well. Goldman says there's a risk of a 5% slump in U.S. stocks, while RBC puts that range at 5 to 10%. We'll hear from Citi's Stuart Kaiser in just a moment, but let's take a look at these markets. 30 minutes until the bell, you can see we have a down day when it comes to the U.S. equity market. The S&P 500 off about 1.6% at the moment. Big tech even more, really leading this move lower, which is interesting here. And we're taking a look at the cross-asset action right now, because you take a look at oil really screaming higher right now, up almost 3% on NYMEX crude oil. A lot of concern about tariffs on Canada and what that will mean for the U.S. energy picture. You can see that being expressed in oil prices right now, and the dollar as well, really strengthening here as investors question what this will mean for the Federal Reserve. You can see the Bloomberg Dollar Index currently up about 0.7%. That's not even session highs, Shonali.
It's incredible. Moves across assets, moves across sectors as well. We're taking a look at the auto sector. Stocks are down there. The incoming tariffs will heavily impact the sector, potentially raising the price of cars in the U.S. by $3,000, according to one estimate. General Motors now down more than 7% pre-market. Ford and Tesla also lower. But then there's the energy sector. The tariffs threaten flows from two of America's biggest foreign suppliers, Canada and Mexico, which send about 4.5 million barrels a day to the United States. You're seeing the biggest drop here in Vistra, of course, which has been a darling throughout the course of the last year. NRG also down, each down 5% for Vistra, but Constellation only down about 3.6% pre-market. Also looking at Constellation brands, because more than 80% of beer imported in the U.S. comes from Mexico, and you're seeing the impact here mostly in Constellation, 5.6% lower pre-market, but you're also seeing Molson and Diageo down pre-market. Just everywhere you look, Katie, you're seeing an impact.
Absolutely, and you add it all together, you're seeing that pain at the index level, and you have to wonder at what point this will catch Donald Trump's attention. Of course, we know that he cares about the stock market, but maybe a little bit less than he did in his first term. You have a note out from Neil Dutta over the weekend talking about how the strike price on the Trump put is a lot lower than maybe we thought it was. And Matt Maley also out this morning saying that President Trump does not fear a correction in the stock market. So we'll see, of course, what kind of moves we need to see to prompt a response, and also whether or not these tariffs will even go into effect.
Well, to that end, holding out for that last-minute deal. Investors are certainly hoping for one. Interestingly enough, you see the VIX less than 20, right below a 20 handle. We're going to talk about that more in just a minute with Stuart Kaiser over at Citigroup. But before that, of course, we're going to bring in our own Emery Hordern, co-host of Bloomberg Surveillance, and has been following this very closely. You know, this whole idea of what will be impacted. I thought there was a really interesting discussion this morning you had with Amrita Sen, I believe, about just how much U.S. energy is going to be hit.
Yeah, it's 4.5 million barrels a day coming, more than 4 million of that coming from Canada. Implicit in what Trump is talking about, only putting 10% tariffs on the Canadian crude imports. Clearly, the administration is aware of how critical the Canadian crude, that heavy, usually sour crude, is to these landlocked countries in the Midwest. Some refiners are literally only built to deal with this Canadian crude. But still, there's going to be a 25% tariff on the more than 400,000 barrels that come from Mexico. So that is going to take a hit. We already know that traders are looking at where they can get this type of crude elsewhere because we don't have it, or a lot of it, in the United States. You'll have to go to Brazil, maybe places like even as far as Iraq. So there is going to potentially be a rerouting of crude trade flows. This is just one aspect of these broad-based tariffs. We should note, they aren't in effect yet. They will be in effect after midnight, but there is a call that'll be happening this morning, or two calls, between Trump and the president of Mexico and the prime minister of Canada.
Well, that's exactly where I wanted to go. What the next couple hours before a minute after midnight on Tuesday looks like. You mentioned these calls are going to happen, and some people have pointed to the fact that you do have that conversation, that dialogue, as a reason why this has been a pretty orderly move so far in terms of a sell-off. How big is the chance, are people telling you, that actually they don't go into effect, these tariffs?
Well, I'm not sure if there's a chance today, but I do think that there is a chance that Trump is in negotiating mode. He clearly wants something from Canada and Mexico. He's made it implicitly clear. He feels like he's won this election on immigration. He wants to go after illegal immigration. He wants to go after the flows of fentanyl. There's more than 40 pounds of fentanyl that came into the United States of the northern border in 2024, according to the data, and then literally thousands coming in when it comes to southern border. And you can see they're using these tariffs through IEEPA, saying it's a national security concern. So potentially they could be short-lived. The big question going into this call is what constitutes success that Canada or Mexico can either do to unwind this threat. And at the moment, that has not been clear.
Yeah, what is the goal here that these tariffs are working towards? Anne-Marie, stay close. That is Bloomberg's Anne-Marie Hordern. And let's continue this conversation now with Citi Head of U.S. Equity Trading Strategy, Stuart Kaiser, joining us at the desk. Another manic Monday trading session to talk to you. And I want to talk about what this move represents to you, because there's plenty of people saying that, okay, maybe tariffs weren't priced in, that these threats would actually turn into policy. And then you have sort of the zoom out crowd saying, actually, this is kind of a muted, orderly move. How are you reading the pre-market price action?
Yeah, I think it has been pretty orderly. I mean, since the highs on Friday, we're down, call it, what, 2.5%, 3%, which is not trivial, but, you know, it hasn't been a, you know, kind of run for the hills type moment. As Shanama mentioned, the VIX hasn't really, you know, accelerated higher the way it did, let's say, back in August when you had real positioning risks and real kind of surprise in the market. So, I mean, if you're an investor in these U.S. equity markets, you didn't have tariffs on your list of #1 risk, you know, early in the year, then clearly you weren't paying attention. So I think part of the reason it's been orderly is because people have their lists. These are the stocks that import from Canada. These are the ones from Mexico, et cetera. So I think investors are pretty well prepared for this. But, you know, anytime you're looking at these risks, it's a risk-adjusted kind of distribution of outcomes. And you had something like 25% tariffs, which was not your base case, which looks like it may get implemented, and the market's reacting to that accordingly.
When you look at the groups of baskets that investors are looking at right now and trading through, what is not yet pricing in some of the worst that is to come or could come?
Yeah, well, I mean, what is the worst, I think, is the other issue. I mean, Canada was, I think, not viewed as a target of tariffs originally. So, you know, that's something where people had to kind of sharpen their pencils again. I think people really, you know, people were trading the peso and Mexican companies more directly on this. So I think the Canada stuff is a little bit of new news. You know, the big kind of unknown, I think, is what happens with Europe. And, you to the extent that he wants to tariff Europe, that becomes a bigger and more significant, I think, kind of issue. So if there is a risk that is not priced, it's probably Europe, and that's basically because it hasn't been talked about yet. So I think Europe is kind of the next one up for people to deal with.
Yeah, and you can see all that being expressed in the currency market. The loonie weakening against the dollar right now to the tune of about 0.9%. A lot of people have euro parity on their mind. But I want to bring this conversation back to the stock market and the idea of that Trump put, because sort of the cushioning for the bulls has been that Donald Trump cares about the stock market. But this time around, people are saying maybe he cares a little bit less. At what point do you think this indigestion that we're seeing would actually catch the president's attention?
I mean, I think you need to move much larger than we've had. I mean, you were basically at all-time highs on Friday, and now you've pulled back a couple of percent. And there's also bogeymen he can blame that aren't himself, right? I mean, you can blame China, you can blame AI and other things like that. So I think you need a significant move lower to deal with this. And look, a lot of the logical also probably would be, look, we can take some short-term pain in the equity market if we deal with long-term, trade imbalances that we've been, in his view, kind of suffering for decades. So I do think, the Trump puts a little bit lower. What's kind of interesting to me is folks that have such high conviction that they know what he's going to do. I think if you're an equity investor, I think anything's on the table, and you can't assume. I mean, I would not be assuming that this is a short-term disruption, nor would I be assuming that I know what he's going to do at midnight, much less next week. So I think you need to be very nimble in these markets.
Yeah, speaking of what's priced in, if you think about what might be priced in terms of what the president of the United States is doing, what about retaliatory tariffs? Do you think investors have really priced in what's possible and how the world might react?
I would say no. I mean, that's your big risk from a tariff perspective. I think the base case for most investors was something that looked like about 10% across the board tariffs, obviously with moving parts around that. But the retaliatory aspect, I think, is the part that will probably gets the Fed's attention as well. Modest tariffs without retaliation, I think the Fed would view as just sort of a one-time impulse on prices. If you start to get a full-on trade war, that becomes something much more difficult and something just much more complicated to handicap. So I don't think that risk is fully reflected. And again, it is a known risk. It just happens to be active right now.
So, Stuart, what's the hedge against these geopolitical tensions, these tariff risks? Because I take a look at the bond market, not really doing much here. I take a look at gold, it's up a little bit. Where do you seek shelter in this market?
Yeah, I think gold has been a very popular one. It hasn't moved a lot today, but last week you did have a significant move higher in gold. I think, honestly, it's a little more nuanced than probably at the asset or index level. People are trying to identify specific U.S. stocks, specific U.S. industries, and things like that to kind of hedge that. But look, I think if you believe in tariffs, what you believe is Donald Trump is prioritizing domestically facing and sort of more cyclical companies. So you kind of want to stay away from those kind of large international exporters. But I think you really need to do that, stock by stock. It's not something that you can kind of cleanly do at the index.
Well, because small caps, I mean, they were sort of pitched to do well in that environment, and yet you look today and the Russell 2000 just falling out of bed.
Yeah, well, Russell 2000's had a tough 6 to 12
Don't we know it?
Stuart, stick with us. That is Citigroup's Stuart Kaiser. Of course, we're going to talk more about those small caps and the rest of earnings season next. We're going to dive into the earnings week ahead with Stuart. Stick with us. This is Bloomberg.
Day. Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back. right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Interest to look at what's making headlines around the world. Panama is promising free passage for U.S. warships through the Panama Canal. That after Secretary of State Marco Rubio met with the president over the weekend. President Trump complained about what he called exorbitant rates that he said Panama charged for using the canal and threatened to retake control. And Elon Musk is mapping out his team's plans to make aggressive cuts to U.S. spending and regulations. This includes wiping out the U.S. Agency for International Development and shutting down some payments to federal contractors. There are concerns about the extent of Musk's access and the potential for abuse. And Beyonce took home the Album of the Year award for Cowboy Carter at the Grammys last night, although she has won the most Grammys of any artist in history. This was the first time she had gotten the top prize. She had won the award for the Best Country Album, the first time a Black artist has won in that category, Katie.
Beyonce, if you're watching, congratulations on the Grammy, but we have to check these markets right now because we do have a sell-off underway and then some. The S&P 500 down about 1.6%. That's actually not session lows. We were at deeper losses in the overnight session, coming back a little bit. Same story if you take a look at the NASDAQ 100, down about 1.8% on your big tech index, but it's really the small caps bearing the brunt of this sell-off. Even though a lot of these smaller companies have more of a domestic focus, aren't as exposed maybe to that tariff story as those big internationally exposed companies, still the Russell 2000 off by about 2.2%, Shanali.
And we're going to be back now. Citigroup's head of equity trading strategies, Stuart Kaiser, with us here on set still. You know, we were talking about this in the commercial break, this whole idea that just a week ago, you had a market that was really rattled by that DeepSeek issue, this idea that maybe we don't need as much CapEx for AI spending in this economy. When you think about the fragility of big tech and you think about the fragility of this tariff threat that is being created in the market, what's the upside here? I mean, there's still mostly analysts across the street thinking we're going to get much higher this year, but how much pain do you endure in between?
Well, I think from the AI perspective, it was actually pretty encouraging last week to some degree in the sense that, yes, NVIDIA and some of the semi stocks sold off, but the majority S&P stock was up on the day. And I think what people said is AI is still a very important investable theme. I'm just going to go at it a little differently, right? I'm going to approach it from the software AI angle, or kind of do a little bit of an end around. I mean, if you wanted to take the bull case from AI, it would be fine. 3 or 8 or 10 stocks got hurt really bad, but for the rest of the market, AI just got faster to develop and cheaper. So that I think is a kind of net positive in the AI side. For the equity side, look, you need the good things that were forecast to happen, and part of that is earnings. You have about 14 to 15% EPS growth forecast in. You have a Fed that wants to cut, and you have strong U.S. economic growth. So I think the bull case metrics are still there. The problem is you have very high valuation and a pretty skittish market right now.
Well, let's wrap in tariffs with the earnings picture a little bit more closely here, because you have Goldman out this morning saying that David Kostin, he's saying that he would reduce his S&P 500 earnings forecast by about 2 to 3% if these tariffs were sustained. You see something similar coming out of RBC saying to expect maybe a 5 to 10% drawdown as it relates to the earnings and tariffs picture. What's your view at this juncture, given all the known unknowns right now?
I think, look, if The tariffs as they stand, the market is telling you this is probably like a 3 to 5% type issue for the market. We'll obviously have to see. We discussed earlier about whether you get retaliatory and stuff like that could kind of cascade it through. On earnings, it looks like the impact would be relatively modest. But again, we don't know the length of the tariffs or the size or which countries they're going to be applied to. So I think kind of putting a specific number on it is very difficult. But yeah, I think the markets are telling you this is a 3 to 5% type issue unless we get like a full retaliatory trade war cycle.
And we do have some news here. Trump, of course, making some comments saying that he just spoke to Canada's Justin Trudeau and that he will speak to Trudeau again at 3 p.m. So a lot of headlines to keep an eye on over the course of the day. But sticking with earnings, what do you make of what we've seen so far? Of course, we've had two big sort of upsets thrown in from DeepSeek to now tariffs. But if you take a look at the beat rate, it seems a little bit less impressive than what we've seen in recent quarters past.
Yeah, I think it's kind of been a tale of two seasons to begin with. After the banks reported, you had a nice about 150 basis point, uplift in quarterly EPS estimates. Post-tech, a little bit of that came out. Same for the beat rate. The beat rate was doing pretty well until last week, and it kind of came off. But if you take a step back, the consensus for the quarter is up about 0.5%. Not great, but not horrible. The average stock is rising on earnings. The average stock is kind of beating its earnings implied move. So what does that tell you? You've had a pretty volatile but net modestly positive earnings quarter. Obviously, the market has rewarded that. Since before banks reported, equities were up. Until last night. So altogether, I think it's been a decent earnings quarter. You've had consensus revised up. You've had the average stock rise. The S&P has kind of trailed that. But, it's also revealed the risk that these earnings are a high bar.
Yeah, when we think about the risk, too, I also want to pull up what it looked like underneath the hood of the Mag 7 over the past month. Dispersion is incredible. You had Meta accounting for a bulk of the gains, and you did have 3 of the stocks in the Mag 7 down, Microsoft, Apple, and NVIDIA over the course of January. What does that mean in terms of the investor setup as we finish off big tech earnings?
Well, I think what it tells you is the bar is high even for Mag 7, and investors are really kind of going into each earnings season saying even within that small group of stocks, there's 2 or 3 that I'm comfortable with, and there's 2 or 3 that I kind of see.
Meta, and more Meta.
Yeah, and look, and Meta's on the software side of things. So I think what the market is telling you is that is the micro version of what I mentioned, that people are a little concerned with the semis trade, but still believe in AI at large. And for that reason, they need to find a place to put that money. I mean, we've definitely seen retail support for NVIDIA on the sell-off. I think we've seen continued institutional supply. And what I think that tells you is Wall Street is a little concerned about the semis trade and is for looking for other ways to access AI as a theme.
How crowded, then, after some of these sell-offs are some of these trades still, particularly when it comes to AI?
I'm very crowded. I think they still are. You don't undo 2 years of positioning in a week of trading, and I think that applied last summer for the yen carry trade. I think it applies for large cap U.S. growth stocks, and it definitely applies for Mag 7. If you're a growth investor, a U.S. equity investor, frankly a global equity investor, these are the stocks you've been buying for 12 or 24 months, if not more. To rebase that positioning in a week, you would have had to have been down significantly more than we were last week in our view.
Yeah, absolutely, and we'll hear from Natalia Konijevich a little bit later in the show, but you take a look at some of the positioning data. You do have hedge funds dumping U.S. equities for a 5th straight week. At least a good time trade for some of those hedge funds. But before we let you go, I do want to meditate a little bit more on the small caps, of course. You take a look at the Russell 2000, really been going through it over the past few months. And again, the bull case, or at least part of it, was that these tariffs were going to benefit these domestically focused companies. What nuances would you add to that narrative?
Well, I think if you think from a macro perspective, you have kind of your hard landing recession outcome. You've got like the immaculate soft landing, and then you would have what I would call higher for longer, which is kind of modest growth where rate cuts get pushed out. Only in one of those 3, which is the soft landing narrative, do small caps really perform the best. So I think what you're seeing on small cap is it only really works in sort of a narrow corridor of data outcomes, and that has become just a big headwind for it. I think, look, the move higher in yields initially helped small cap in value, and then people realized that no, these companies actually carry more debt, need to refinance, have a little more credit risk. So I think what you're seeing is you really need to thread a needle to get the small cap trade to work, and we've been able to thread that needle for narrow periods of time. And then lastly, who's the incremental buyer of small cap? I think is an issue. You do have institutional money will go into small cap tactically ahead of key data, ahead of key headlines. But retail doesn't tend to buy small cap, and I think that makes that trade have a little bit less follow through, than some of the other stories. If you're an investor in Europe or Asia, you're not buying U.S. equities to buy a low quality cyclical, right? You're coming here for large cap growth, and I think that lack of a second buyer has hurt.
But don't rule out the equal weight. I missed you last week because the Russell might have underperformed, but the S&P equal weight really held its own.
That's true. So people, looking to get outside that concentration, maybe not in small caps, but still equal weight, seeing some sunshine. Stuart, great to see you, though. Really appreciate your perspective this morning. That is Citi Head of U.S. Equity Trading Strategy, Stuart Kaiser. Now, coming up next hour, more on the trade war and economy with former White House economist Joe Livornia. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
All right, welcome back to Open Interest. On the first trading day of February, a lot of people probably wishing that the stock market just doesn't open at all, because you take a look at the early morning action, the S&P 500 currently off by about 1.7%. Not the worst levels that we saw overnight, but still pretty bad. The NASDAQ 100 down about 1.9%. And then the Russell 2000 off by about 2% right now. The small caps really feeling the brunt of that pain. So big moves, pretty orderly. You could make that case, of course, if you're feeling a little bit optimistic, but we'll have to see how this market opens in less than 4 minutes. We'll discuss, of course, all of that action with Dana Dioria of InvestNet. That conversation up next. This is Bloomberg.
in recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
All right, we are moments away from the opening bell on the first trading day of February. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. A pretty brutal start, of course, to the month. You think about just a week ago, we were dealing with DeepSeek AI and what that meant for the AI build-out supply chain. Now we're dealing with the broader supply chain and, of course, the threat of tariffs going into effect at 12:01 a.m. on Tuesday when it comes to Canada and Mexico and China. You can see the action in the pre-market right now. Traders trying to price in the fact that maybe these weren't threats. Maybe actually these will turn into policies. Of course, the questions become how sustainable they will be, how long-lasting they will be, and what that means for the Federal Reserve. But even still, you can see the opening bells are ringing. People are clapping over at the New York Stock Exchange, over at the NASDAQ as trading does get underway officially. And you take a look at how we open 27 seconds in. You can see the S&P 500 off by about 1.7%. And then it just gets worse from there. You can see the NASDAQ 100 off by about 1.9%. Big tech really feeling the pain here, but even that pales in comparison to what we're seeing in the small caps right now. The Russell 2000 off by about 2.4%. For all of these indexes, last week was a down week. This week kicking off on a down note as well. And it'll be interesting to see if the earnings picture changes anything, but we have to start, of course, with the automakers. When you think about the impact of tariffs, half of U.S. imports of assembled cars come from Mexico and from Canada, with some 80% of car parts imported in the U.S. coming from those two countries as well. There's estimates that car prices could jump by $3,000, according to Wolf Research. And as such, you take a look at the big automakers this morning, Shanali, all three lower right now.
And many of them had idiosyncratic issues of their own. This really adds to the storm. I'm looking at the booze companies here. Constellation Brands, Molson Coors, Diageo. Of course, input prices will be higher. The U.S. imports 11.8 nearly billion of mainly beer and tequila. More than 80% of the beer imported into the U.S. is from Mexico. Tariffs could push consumers to more domestic booze companies. Constellation feeling the brunt of the pain, now down more than 7% as the market opens. We're going to check on the energy sector as well. Canada and Mexico are two of the largest external suppliers of oil to the United States. Trump signed a levy of 10% imports on Canadian energy, sparing it from the 25% benchmark, but still pretty brutal. We're looking at different forms of energy companies here. Vistra also down now almost 5% as the market opens. NRG and Constellation also dropping, as well as the traditional oil companies as well. We're looking at the tech sector this week as well, because they're heavily relying on all types of this energy to power AI. We're going to get some major earnings like Google and AMD this week. We're going to discuss it with Bloomberg Technology's Caroline Hyde. We were talking a little bit about how the Magnificent Seven over the past week, major dispersion. And when you think about the week ahead, what are you listening for?
Again, it's going to be about capital expenditure. Again, it's going to be about the thesis of where value is going to accrue from generative AI. What is AMD going to be doing in terms of managing to steal away some of the server and data center revenue upside that NVIDIA has so dominated? AMD is going to be coming out for us. We've got the who's who coming out throughout the few days. You've got the likes of Qualcomm, another chip sector, another car-orientated company. So keep an eye on Qualcomm and what they say. We were going to have Uber as well coming out a little bit on Wednesday. But on Thursday, you're then going to be getting into the nuts and bolts of what Amazon is saying. Alphabet, of course, is coming on Tuesday night as well. And more imminently, tonight we got Palantir. Now that is a generative AI story, Katie.
Absolutely. And tell us about the expectations there, because as I mentioned at the opening, we're just a week out from those initial DeepSeek AI headlines that really rattled all of Silicon Valley and Wall Street as well. When you think about Palantir coming up, you think about what we heard from some of the tech giants last week. What are the expectations, and have they changed at all relative to a week ago?
Expectations for Palantir are so extraordinary in terms of what is priced in and what they could ever deliver to vindicate a more than 200 times price to future earnings currently valuation, that they've got to start to show that the hype is real, that you're going to see government continue to plow into their offerings when you've got a competitive threat like China. Now, interestingly, Dr. Karp was speaking out about what we saw with DataSeek and how important it is for the US to compete and ramp up in terms of spending on generative AI. But this is a company that's going to give us about a 28% uptick in revenue. You're likely to see earnings actually come worse than the previous year. 28% revenue when you're delivering in terms of a stock run-up of 350% in the last year. How are they going to vindicate that? Brent Thill, of course, over at Jefferies, has said the only way you could substantiate this sort of market capitalization, this price to future earnings of 200 times, you're going to have accelerated growth of 50% over the next 4 years. They're going to deliver us 28% growth. So many are going to be worrying about a slowdown in Europe in particular, and indeed whether or not we're just seeing the generative AI hype be realistic to what really retail have driven into a frenzy in terms of this stock last year.
Absolutely. The stock up 370% over the past year alone. Certainly the stakes are high. Bloomberg's Caroline Hyde. You can catch her on Bloomberg Technology right after this show. But stick with us, because joining us now is InvestNet President and co-CIO Dana Dioria. She joins us now. And Dana, I have a very interested viewer writing in. His name is Matt Miller. Usually he's at this desk, but he's somewhere in Indonesia, I believe. But he writes in that he can't believe the market is holding up so well. You'd think oil would be at least 80 plus and treasuries 30 basis points higher in terms of yields. You think about what we learned over the weekend when it comes to tariffs, that deadline ticking down to tonight at midnight. Do you think that this is a reasonable reaction in the markets, or would you have expected to see a little bit more fireworks?
Well, we're just starting, right? We'll see how the course of the day goes. So this is one of those moments where it's difficult to say. We could have a pretty bad day in the markets today. What I will say is a couple things. One, obviously, to a certain extent, the market had priced this in, or at least the possibility of it. I think the Trump administration demonstrated within the first few days that much of what they talked about doing, they were going to do, right? And so all these executive orders that you saw happen literally first days of Trump's presidency. So I think to a certain extent the market was already anticipating some of this. I think it's not surprising where you're seeing some of the biggest impacts. So you look at small caps. I think over time, as the market digests the actual impacts, and small caps are not potentially as affected necessarily in tariffs because they don't have as much international dependency. But what they are impacted by is interest rates. And the Fed will undoubtedly see this as inflationary. So we're probably looking at higher for longer, which is not good for small caps. So I think the immediate reaction is sort of what you'd expect. But there's a lot to go here for the market to piece together what exactly this is going to mean. And of course, there's more news to come, right? We already know that he's looking at Europe as well.
And not to mention the current set of tariffs are expected to take effect midnight into tomorrow, but a lot can happen between now and then. And even beyond that, we were talking to Stuart Kaiser over at Citigroup a little earlier. The point he made is even if you have some of the tariff threats from the President of the United States baked in, what you don't necessarily have, and want to see if you agree with this, is the idea of retaliatory tariffs. If we have other nations, Canada, Mexico, otherwise reacting, do you think some of that threat is priced into the market right now?
Well, I think the market certainly has understood that there's going to be a reaction, that retaliatory tariffs are, likely. I think it's interesting that Trump did 25 for Canada and Mexico and only 10 for China. If you look at just revenue from the S&P, China is a bigger piece, right, than Canada and Mexico. So I think there's, a consideration that that's going to happen. And I think to a certain extent, the market is, again, piecing together how much that can impact. The immediate obvious effect, inflation, prices of goods increasing, and therefore interest rates staying higher. The longer term effect, you have to also consider, is this where we land, right? And I think you're sort of suggesting that to a certain extent, that this is an administration that approaches a lot via a negotiation stance. So is this a starting point? And then, there's some negotiation and maybe, we ease off a little bit. That remains to be seen. But to the extent that there's retaliation, that retaliation, obviously, if there is no negotiation here, if this is, we're at 25, they retaliate, Trump makes good on the threat to go even further, things could get pretty drastic.
Well, given that there's so much we don't know if these tariffs will go into effect, and if we do, we don't know if there will be retaliatory tariffs. How do you position around this? It feels like you can't escape it at the benchmark level. So do you just look through what we're seeing right now, or do you look for hedges here?
So I think if you're in the markets, this is classic systemic risk, right? It's hard to find a place in the market that's not going to be impacted by this. There's, of course, systematic risk when which is across the board risk, and whether you're in the US or overseas, whether it's international, developed, or emerging economies, this sort of global trade war type of a consideration is going to impact across the board. Now, how much it impacts different places will certainly matter, but most retail investors are sitting in some sort of maybe some tracking error to it, but something that looks akin to maybe an S&P 500 investment or an MSCI ACWI. And so for them, the systematic risk is going to impact all of equities. And that's why you're seeing gold stand up. How are bonds going to react to this? The typical place for retail investors is to look at what is my risk tolerance for all of this, and do I have more than I need in equity markets in general? But I would caution anybody to try to, move on this, right? You don't know where it's going to land. I mean, we saw pre-election night that Mexico looked like it would be a beneficiary because a lot of the talk was around China. So trying to find sectors at this point, say I'm going to hide out here, or countries or geographies, I think is a tough situation to be. It's more, am I overly exposed in equity markets in general?
Dana, we thank you so much for your time today. I wish we could go longer. As you're speaking of gold, you have gold hitting another record. It's certainly the haven trade of the day. That is Envestnet's Dana Doria. Thank you. Now we're going to hone in on one sector in particular, the auto sector, because markets are digesting Trump's tariffs, and that's a place you could seriously see it. Stick with us. This is Bloomberg.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
You up-to-the-minute global financial news whenever and wherever it happens. I'm Jonathan Ferro.
And I'm Lisa Abramowitz in Davos, Switzerland, and this is Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for top calls. Some of the analyst action in focus this morning. Tariffs, obviously a big theme today. And first up, Loop Capital downgrading transportation companies, including FedEx, citing President Trump's tariffs. The firm has, quote, eliminated all positive ratings in the sector and recommends clients don't add to positions until the dust settles. You can see the dust not settled right now. FedEx shares currently off by about 5.8%. Next up, Piper Sandler cutting its price target and downgrading Constellation Brands, which is the distributor of Corona and Modelo beer. The analyst says that Trump's tariffs could put pressure on revenue. You can see Constellation down about 5%. And finally, U.S. Steel also getting downgraded over at Morgan Stanley, this time because of valuation. However, the analyst does say that steel prices could improve thanks to those protectionist trade measures that have been promised by Trump, but adds that demand growth will remain sluggish. Shares deciding what to do right now. U.S. Steel currently higher by about 0.7%, Shanali.
Now, Katie, I also want to bring you some breaking news because you have Treasury Secretary Scott Bessent is temporarily tapped to lead the Consumer Financial Protection Bureau in addition to his role as Treasury Secretary. This comes after President Trump had ousted the previous CFPB director, that is Rohit Chopra. Remember, Rohit Chopra was extremely aggressive, criticized as aggressive, rather, in his role as the CFPB head. The director of the CFPB, remember, the CFPB was right after the 2008 financial crisis, a very significant body that has in recent months and years garnered more criticism. But of course, a big role here for Scott Bessent to be overseeing this in addition to his existing role,
two things there. I
very
mean,
large to begin with.
You think about where we were even a month ago, all that optimism that we were going to see a friendlier regulatory environment. This move would certainly signal that shift. But to your point, being Treasury Secretary, already a big job. Scott Bessent going to be a busy man.
Certainly one to watch this week and in the future as well. He's working on debt issuance as well. We'll talk more about that later. We're going to go back. We're going to go talk about the Trump tariffs because, of course, this morning has been a busy one. They will impact $250 billion of trade in the auto sector. And car prices in the U.S. could climb by $3,000, according to Wolf Research. Some 80% of auto parts imported in the U.S. come from Mexico and Canada. We're going to bring in now Bloomberg's Global Autos editor, Craig Trudell. You're really seeing a significant hit to the stocks of a lot of automakers, both in the U.S. and abroad at this juncture. What is the biggest curveball for investors at this juncture?
Yeah, I mean, I think even just up to the end of last week, you had some analysts sort of, throwing out there the prospect of, well, maybe there will be an exclusion for autos. I don't think anybody thought this could possibly sort of come to pass, just given how sort of interconnected this industry is. And when you have, in some cases, a part that goes into vehicles at the extreme will cross the U.S. Borders with Canada or Mexico as many as 8 times. And so, when you think about the opportunities for duties, depending on how they're implemented, to really just, kind of spiral and have a really substantial impact on end costs for the consumer. And of course, this is a very low margin industry. The idea of a 25% tariff would just wipe out everybody in terms of any sort of profit margin that is embedded within a parts supplier's relationship with an end manufacturer. And so this would be hugely disruptive to this industry.
Absolutely. I mean, there's some estimates out there that car prices could increase by $3,000 with these tariffs hitting the auto sector. But Craig, I mean, we've talked to a lot of people at a broader level saying, wait a second, just breathe. We don't know if these tariffs are going to go into effect or not. We don't know how long lasting they will be. When it comes to the auto sector in particular, though, when you think about how exposed it is to these tariffs, is there any part of this story that's being overblown at this point?
I mean, I think you have to kind of sell and wait for a reason, wait for an excuse to buy at this point. Especially this 25%. I mean, it's just a really, really substantial. I think it would have been a sort of shock to the system to have 2.5%. Again, going back to just the sort of amount of margin that you see within this industry. Even that would be a really big deal for these manufacturers and their supply chain. 25% is just substantial, and so even a company like Tesla that has talked about building a plant in Mexico has not gone through with that. It is sort of widely thought of as being highly reliant on not just U.S. production, but a U.S. concentrated supply chain. They have quite a bit of parts suppliers, in Mexico and source components from all over North America. And so this, would be disruptive to them as well, which you heard the CFO talk about last week during their earnings call.
All right, sell and wait, not necessarily investment advice there from Craig Trudell. He leads our global autos coverage, very busy man. And speaking of busy people, coming up, Elon Musk says that his Doge team is shutting down payments to federal contractors after likely gaining access to sensitive Treasury Department systems. That's next in our Wall Street Beat. This is Bloomberg.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
And it's time now for the Wall Street Beat. Treasury Secretary Scott Bessent has reportedly granted Elon Musk's Department of Government Efficiency unprecedented access to Treasury systems that process tens of billions of dollars a day in payments for U.S. government agencies. It's all part of a directive by President Trump to modernize federal IT, and Musk's first target is the U.S. Agency for International Development. Bloomberg's Mac Chafkin covers all things Elon Musk. He joins us now. What does it mean for Musk to get this sort of access, especially when it's been so unclear for months now or weeks now what role he would really be playing in the government and where this agency would fall?
I mean, first of all, I think it's clear that Musk's role goes far beyond IT, which is what, as you said, the executive order said, but it seems clear that Musk and President Trump view him as having a role that's much broader, essentially cutting off federal funds to all sorts of parts of the sort of government apparatus, as well as, you know, essentially creating very difficult conditions for civil servants and federal employees under the auspices of reforming the civil service and cutting costs. I mean, right now, it's all about cost cutting. I don't think we're seeing a ton of anything else.
Yeah, and I mean, you make a good point that, again, originally what Doge was envisioned as, it seems like we're past that point. But what has the reaction from Donald Trump been like so far? I mean, we heard from him on Sunday.
Donald Trump has been supportive so far. And you know, it sort of makes sense, partly because, of course, Elon Musk was a major donor to the Trump campaign, the biggest donor, in fact. He's a senior advisor to President Trump. He's you know, in the Oval Office all the time. He has an office in the White House. So of course they're kind of on the same page, but also Trump has kind of embraced this method, and it feels, you know, Trumpian in a sense. It's chaos. It's the same kind of sort of shock and awe thing that we're seeing on the tariff side, but playing out on the you know, attempts to reform government.
But what's interesting to me too is you don't have kind of Elon Musk hiding behind the decision making and what's happening here. He took to X to have a Spaces session. He tried to answer some questions, but how much of it is actually happening? He said he was going to be talking to Jamie Dimon.
That caught my eye.
That caught my eye as well, because at what degree do you have Elon Musk being able to control the bond market? Of course, this is of critical significance here when you have the Treasury Secretary already reportedly giving him access, thinking about how he's going to deal with the bond market in and of himself. What role then does Musk really have kind of with the broader financial community as he gets this done?
Well, I think Musk is going to do his best to try to make sure that these actions don't hurt President Trump's poll numbers and they don't hurt, you know, the markets. And I think that's going to be a pretty tall order. I mean, we are in pretty uncharted territory here, both because of the sort of questionable sort of legal issues around this. It's not clear that as Musk said, he shut down USAID or shutting it down. It's not clear that that's legal. And I think there would be big questions if that were somebody else in Donald Trump's administration, somebody who perhaps was a cabinet member or who had gone through the vetting process, who had done financial disclosures. But none of that's the case with Elon Musk. It's not totally clear what his status is even within the government. You have these actions being carried out by this kind of small crew of very young people who seem to be loyal to Elon Musk, but again, not clear if they're official government employees or whatever. And of course, Musk is famously erratic. So there are all these potential issues that I think are going to be rattling both markets and voters, in fact, as we go forward.
Well, we'll look to you for our answers. That is, of course, Bloomberg's Max Chafkin covering all things Elon Musk. And coming up in the next hour, we're going to get more on the trade war and the economy with former White House chief economist Joe Livornia. That conversation coming up next. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Stocks have opened down across the board with President Trump's 25% tariffs on Mexico and Canada set to kick in at midnight. The Dow is down 584 points right now. NASDAQ off 376. That's about 2%. Market analyst Eugene Peroni.
The reality is quickly striking the market that this could have significant and perhaps lasting ramifications and impacts on the economy.
President Trump says he spoke to Prime Minister Trudeau this morning. Last night, Mr. Trump said,
"We may have short-term a little pain, and people understand that, but long-term, the United States has been ripped off by virtually every country in the world."
He says he and Trudeau are scheduled to speak again this afternoon. CBS's Chris Mavridis reports from Toronto on retaliatory tariffs.
It'll mean trucks made here, like the Chevy Silverado, Toyota Tacoma, and Ford Super Duty, could cost Americans considerably more. Soda and tuna fish could be more expensive, too, now that Canadian aluminum will cost American canners 25% more. A second, larger phase of revenge taxes on Canadian-made stuff will start 3 weeks from now unless Ottawa and the White House figures something out.
President Trump's vowed to use the detention center at Guantanamo Bay to hold thousands of criminal migrants. CBS's Cammie McCormick.
The Pentagon says more U.S. troops have arrived at Guantanamo, more than 150 assisting in this latest mission. The Pentagon was readying orders for the deployment of at least 1,000 additional active duty troops for the crackdown on immigration.
Secretary of State Marco Rubio is in Panama, where he witnessed a deportation flight carrying 43 migrants take off for Colombia. Correspondent Ed O'Keefe from Panama City.
We don't normally see American officials observe the return of undocumented immigrants to their home country, but at least once, possibly twice this week, the Secretary is going to see this during his trip
The wreckage of the American flight that collided with an Army helicopter last Wednesday could be pulled out of the Potomac River as soon as today. Correspondent Chris Van Cleve.
We understand the focus initially this morning will be on removing one of the plane's engines, which should then make it possible to access additional pieces of that airplane.
Remains of 55 of the 67 people killed have been recovered. A new bank rate survey finds nearly half of loan applicants have been rejected over the past year. Analyst Sarah Foster.
Those Americans at the bottom end of the spectrum, low income, lower credit scores, they're the ones who are having the toughest time.
Dow now down 628. This is CBS News.
Or CVS.
There's a new report on climate abandonment, leaving places like Southern California and the Gulf Coast. CBS's Jim Krasula.
The U.S. real estate market will lose more than $1 trillion in value as Americans move away from areas more at risk of natural disasters and extreme weather events. That's according to a new report from a climate analytics firm called First Street. At the same time, the company says many Americans will likely continue to move to areas that face the most weather peril, especially coastal areas.
A former surgeon in northwest France is set to go on trial this month after he was accused of raping and sexually assaulting minors. French paper Le Monde reports 73-year-old Joel Lescournac has been accused of abusing 299 children between 1989 and 2014. The majority of the alleged victims, former patients who say they were assaulted while they were under anesthesia. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We're also streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast Now, and that's where you'll find Alex Steele and myself. Coming up, we're going to get a look at some economic data. We have some ISM data came in a little bit better than expected. We'll break that down in just a moment. Tyler Kendall, Bloomberg News reporter, give us the latest reporting on these tariffs that go into effect, I guess, midnight tonight. Carol Pepper, founder and CEO of Pepper International, give us her market thoughts. And then Michael Dean, Bloomberg Intelligence, he's head of the Global Autos Research. These tariffs are going to impact a lot of the big auto companies, so we'll break that down, see what it means for us when we get to the lot to buy a car. Right now, let's go to Tim Fury. He's chair for the Institute for Supply Management. That's ISM for us fun kids on Wall Street. We had some data coming out here today, Tim, in terms of manufacturing data. What did you learn?
Well, we finally had confirmation that demand is coming back, Paul, finally. So we had a really good demand number, not only supported by new export orders increasing, customer inventories were lower than normal, and the headline number was very good, coming in at 55.1. So demand is coming back. We also had a good side on the output piece with production and employment. We had production expanding again at 52.5, and employment seems to be leveling out now. It looks like manufacturers are not releasing headcount as much as they have been for the last 6 months. And the input side remains accommodative. Suppliers are delivering okay. I think the big story here is the prices number, Paul, is higher than you would normally expect. Now, there could be a couple of reasons for that. One of them being that we definitely put new prices into place for January, and those prices are probably higher than what they were back in December of last year. So I don't expect that prices number to stay up, assuming that nothing else is happening like tariffs. But that's probably the only negative in the report is the prices number was higher than expected.
Yeah, Tim, I was going to say, so I have a two-for question, and it wraps in tariffs. So one, does the upside continue, which is really, can it continue with tariffs?
Geez, Alex. I don't know what to say.
So you don't know.
I'm not sure what to say.
But what are manufacturers saying? Because no one knows.
Well, we lost over 10 points the last time we had tariffs go into place in 2018. 2018 to 2019, we lost over 10 points on the PMI, and we lost over 20 points on the price index. So this is definitely going to be a headwind. I personally don't think that Mexican and Canadian tariffs are going to stay in place. It is so complicated. But the China tariffs probably will, so that's going to be a continuing headwind. I'm just hoping we get beyond this because that amount of input stuff is just going to be really confusing. And the question is, what are we really after here? So if we're after budget support, then those tariffs are going to go into place, and that's going to be a real headwind. That's going to crash. It's going to stop our growth. If they're just a movement to get other attention for other things in North America, then okay, we'll get through it. But lots of unknowns here for sure.
Okay. Tim, a quick last question. Which manufacturing sector is most concerned right now?
Oh, it's going to be the transportation equipment sector for sure, then followed by computer and electronics. A lot of that stuff comes out of Mexico. The automotive side, you've seen the story. And I think, the interesting thing about the tariff executive order is that they're excluding duty drawback, which is unbelievable. So you've seen the stories about stuff going back and forth. What they're really saying is that it'll be tariffed each time. So a 25% tariff on 50% content crossing the border 3 times could turn out to be an 80% tariff, which isn't reasonable. So, why would you tariff your own stuff as it's going back and forth over the border? So I think there's a lot of unknowns here. We'll see what the rest of the week brings, because I don't think you can go a week with this kind of uncertainty. Right. We'll see what next week brings.
All right, Tim, thank you so much. We appreciate it. Timothy Fiore, chairman of the Manufacturing Business Survey, the Institute for Supply Management. All right, let's get a little quick data check here. We'll check in with Mr. John Tucker for a Bloomberg Business Flash. John.
All right, stocks are lower. And as Tim was just mentioning there, some of the auto manufacturers, GM, those shares down 4.4%, Ford down 2.4%. And it's important to note that some of the components that go into cars, they go back and forth to Canada or Mexico, for instance, as many as 8 times. So those tariffs really would add up. There's one estimate that the cost of a new car would increase by at least $3,000 should these tariffs go into effect. As for the major averages right now, the S&P 500, 105 points lower. That is down just about 1.8%. All 11 major industry groups in the S&P 500 down right now. Dow Jones Industrial Average down 595 points. The tech-heavy NASDAQ 100 right now 1.9% lower. And with tariffs set to take effect tomorrow, RBC Capital Markets head of equity strategy, Lori Calvasina, says, what, the S&P 500 at risk of a 5 to 10% drawdown.
Even before this announcement was made, we thought stocks were vulnerable to a 5 to 10% drawdown just by virtue of where valuations have been and where positioning has been.
And right now, as we look at currencies, dollar DXY, that is up 0.8%. Part of the reason for the increase in the dollar is, well, it's a haven. As far as the Mexican peso, that's up 1.7%. The Canadian loonie, Canadian dollar down 0.9% right now. And move to some of the smart money. Let's go right to treasuries. You have the 2-year yield 2 basis points higher at 4.21. The 10-year right now 6 basis points lower at 4.47. That is curve flattening. Could be a warning of possible stagflation concerns. We check the markets view all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business. talk too much.
No, that was great. But look at you, curve flattener. What? That was awesome.
Look at you with the
curve
yeah, it's all in that moment with the curve and the flattener thing. All right, JT, thanks a lot. Alex Steele here alongside Paul Sweeney. Let's get more on the market, some individual stocks to focus on with Isabel Lee, Bloomberg cross-asset reporter. Isabel, a lot to choose from. What's front and center for you?
Yes, today was really tough. So I'm going to do themes. We have large Mexico sales exposure stocks. There are really getting hit. Jabil Circuit, Borg Warner, Union Pacific, Sempra. And in Canada, it's Dayforce, United Airlines, ExxonMobil, and Costco. All are definitely edging lower. There are so many notes on tariffs today. But the main gist, I think, is Wall Street doesn't seem too anxious because they're seeing this thing that Trump is doing as just a threat.
Maybe that'll be true, but I don't see any reason not to take him at his word. I think he seems pretty committed at this point.
There could be that.
Which is why it's so interesting why we're seeing a market reaction so extreme, right? If you look at, say, dollar MEX, you look at the loonie, like Tucker was just talking about autos, for example, like we're getting hit so hard and you're like, but why we knew this was coming? And if you don't believe it, why are you getting hit hard as well? What else are you looking at?
Industrial stocks, with their wide exposure to the global supply chain, of course, they're the most hit in the sector. We have automakers and their suppliers, transport companies. I'm looking at Stellantis, Ford, General Motors, Harley Davidson. GM actually is wide as it's expected to see the biggest fallout by the end of the day because it has the heaviest exposure to Mexico and Canada. So there's really that. And I don't have a car, so I'm not as affected.
That's right, because you're a New York City gal, right? You're smart. Okay.
But for others, like
and
some of
these
my
subways are manufactured by Bombardier of Canada.
Exactly.
Ooh, nice.
That's a fair
nice
point.
info on
I
that.
didn't know that.
All right, very good. Isabel Lee, thanks so much for that. We appreciate it. Cross-asset reporter for Bloomberg News. Let's get some reporting on this because the threat is there. The question is, will these tariffs be put into place at midnight tonight? Tyler Kendall joins us. He's a reporter for Bloomberg News. Tyler, the markets are certainly reacting to these tariffs. What's the feeling in the White House as to implementation?
Well, President Trump, in a post on Truth Social earlier, said that he's already spoken to Prime Minister Trudeau of Canada and that the pair are going to speak again at 3 p.m. Eastern. We're still waiting on guidance on when President Trump is going to speak with his counterpart in Mexico, but we do know that those calls are on the books. Now, I did have the chance to catch up with Kevin Hassett earlier. He's the director of the NEC here at the White House, and I pressed him on what sort of benchmarks of progress that the White House is going to be looking for in order to ease these tariffs on Mexico and Canada. He said that he didn't want to get ahead of President Trump's phone calls, but he did want to make clear to me that the White House's messaging around this is that this is not a trade war, but rather a war on illegal migration and drugs. That gives us a little bit more insight into how the administration is framing this argument to use these emergency powers to enact them.
Absolutely. I'm also looking, though, at what's happening in the equity market. S&P down almost 2%, the NASDAQ off by 2.5%, the Dow off by over 1%. This is clearly having a negative impact in the equity market today, and I'm wondering how closely the administration is monitoring that effect.
Right. Well, previously leading into this administration, it was often said that President Trump was going to be looking closely at the stock market sort of for a check on his policies. But it remains to be seen. He hasn't commented on this quite yet. But one of the other big questions that this administration is dealing with today is the potential impacts it could have on consumers, particularly after President Trump last night floated to reporters that there might be a little bit of pain. I will mention that I did ask Kevin Hassett about this, and he says that he disagrees with most economists who say that this could cause inflation. Instead, that due to what he called a supply shock, he thinks that inflation will actually go down because of these tariffs. Important to note that they appear to be trying to bank on this idea that they're going to shore up U.S. domestic manufacturing. But, Alex, not everybody seems to be on board with that plan or those potential impacts. The National Association of Manufacturers, which represents about 14,000 groups in the U.S., in a statement to Bloomberg News, says that they are anticipating what they called severe ripple effects for their members because of these tariffs.
Tyler, have we heard anything from any significant members of Congress as it relates to these tariffs, either for or against?
Right. So actually, I reached out to Senator Ted Cruz of Texas. He sits as the chair of the Commerce Committee, so sort of has an interesting perch into this. But notably, Texas is actually the #1 trading partner when it comes to Mexico. And he told me in a statement last night that he actually supports expanding U.S. and Mexico trade, which isn't necessarily something that you're going to hear from all Republicans, but that at the end of the day, all of these players need to come to the negotiating table. Some Republicans, particularly those from top agriculture producing states, have sort of walked this fine fine line when it comes to their rhetoric on tariffs. Just look at Senate Majority Leader John Thune, for example, who has previously said that he would really only support tariffs if they were done in a targeted way. So you're seeing some Republicans, of course, close allies to President Trump, say that they support this because it's going to help accomplish his immigration agenda and also tackle fentanyl. But then we're also watching some of these more moderate Republicans, agriculture, auto state Republicans, just to see how they are reacting to this as some of the sectors in their state might get hit.
All right, thanks so much, Tyler. Really appreciate it. Tyler Kendall joining us outside the White House on more tariffs. We're obviously going to be covering this throughout the next 2 hours. We're going to talk to Carol Pepper, founder and CEO of Pepper International. The broader look on the market, as I mentioned, the NASDAQ getting hit hard. The S&P's off by almost full 2 percentage points. Plus, Michael Dean is Bloomberg Intelligence head of Global Autos Research. And we'll get the skinny on Volkswagen and Stellantis. They are €6 billion losers on year of tariff hike. We know that GM is going to be a big loser here in the U.S., but overseas, Volkswagen, and then, of course, Stellantis, which is also traded here. We're going to have that all covered for you over the next couple hours. So that's a Monday for you, Paul.
That is a Monday. It's all about tariffs, and everybody's trying to adapt, including the markets.
Let's see what happens over the next 24 hours. That's a long time in this administration. This
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Business Flash being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to the Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks most exposed to tariffs, they are falling in the S&P 500. All 11 major industry groups, they are down right now, being led by consumer discretionary. That's where you would find Tesla, as well as information technology. Shares in automakers, chip makers, energy companies, the biggest movers. Companies exposed to manufacturing imports for China, they'll be impacted by the new measures. Like Apple, those shares right now down 3.6%. As far as the automakers, GM shares down 4.2%. Ford shares right now, they are down 2.7%. And NVIDIA was the most actively traded, or among the most actively traded right now, down 4.3%. Overall, the S&P 500 down 96 points. That's a decline of 1.6%. The Dow Jones Industrial Average down 490 points right now. The NASDAQ 100, 381 points lower. That is down 1.75%. And Treasury yields, they're fluctuating. Short-term yields rising. Longer-term yields, they are falling. Investors worried about the impact of tariffs on the economy as well as interest rates. And, of course, the dollar's strengthening. A bit of that has to do with a haven bid. Dollar DXY right now, it is up just about 0.6%. I want to bring this breaking news to you. We're going to switch to French politics. Nice. The prime minister forcing through a budget. So as a result of that, he risks a no confidence vote. So we're talking about the French government. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
Yeah, what would that be? A couple months since we had the last fall of the French government due to the budget?
Yeah.
Check that box. Okay, thank you so much,
And
John
it's
Tucker.
one of those things, it's like a worldwide story. You know, Canada with Trudeau.
Korea.
France.
Mm-hmm. Yep. Germany is coming up as well. Anyway, we were
It's
talking.
not just us.
No.
We're in good shape.
Sure, maybe one way to look at that, but yes, it's not just us. That is true. All right, let's take a look at what you do in this market. Now, I'm taking a look at the S&P mini futures contracts. We are off the lows of the session that we hit earlier in the morning before the cash open, so keeping that a little bit in mind. Carol Pepper, founder and CEO at Pepper International, joins us. So, Carol begs the question: do you buy this dip?
Yes. Well, as you guys know, I manage money for families with over $100 million who are typically family offices, and I would say wait a little bit longer to see how much the dip is going to dip. This is a dip. It's a 2 to 4% dip, not bad. You can buy this dip if you want to, but we may, if it looks like these tariffs really will be implemented, this is just the beginning of a dip.
Right. Well, just a red headline crossing the Bloomberg terminal right now. Mexico's Scheinbaum says tariffs delayed for a month. So we'll have more reporting on that. Apparently, the Mexican president had a conference call earlier today with President Trump. So perhaps some relief there. Carol, as we just kind of step back here and think about some of the volatility or the news flow that tends to come out of a President Trump administration, how do you tell your clients to kind of deal with that?
Well, I think you have to, again, keep your eyes on a longer-term prize. What sectors over the long term are going to do well, not within the first 30 days of a brand new administration, but what trends that have been true for years are continuing to accelerate. And I think those trends will work no matter what comes out of the new administration's strategic statements in the first month as they're trying to, put their stamp on the government. Mm-hmm. So if you look at things like defense technology, the entire world has burned through a lot of weapons. That is going to continue to be upgraded with AI. There's going to be more robotics. There's going to be more drones. There's going to be more data centers. AI is not going to go away. Consumers are going to continue to switch and shop on Amazon rather than in bricks and mortar stores. All the things that we've been talking about still apply today. With the threat of tariffs, if they're now or in a month or two. So you still have to keep your eye and then think about entry point. When should you enter these stocks? And so that's really what we're doing. We're not changing our basic thesis because we do believe it is going to